www.ntvforex.com. U.S. second quarter GDP preview profit taking on optimistic numbers. http ntvforex.com News ID 0009C1. 5 minutes ago. By NTV Forex Team. Second quarter GDP is forecast to contract 34.1% annualized, while Atlanta Fed GDP now estimate for Q2 is 34.3%. To the equity markets, second quarter GDP is old news as the dollar has factored in the GDP result and the likely Fed defensive lower rates. Joseph Trevisani, an analyst at NTV Forex, expects some profit taking in currencies such as the euro and the yen in case figures beat estimations. Key quotes. The widest measure of economic activity is forecast to drop 34.1% in the second quarter, with range of consensus estimates in the Reuters survey running from 22.6% to 40.0%. The Atlanta Fed GDP Now model predicted a 34.3% decrease on July 17, with one more update to its estimate on July 29 before the Bureau of Economic Analysis release on July 30. There is the possibility that the expectation for a disastrous figure may be overstated. The issue is not that economists are natural pessimists, though economics is sometimes called the dismal science, but that there are no modeling parameters for analyzing these events. In such a situation, projections and assumptions operate in a linear fashion. There is no term in the equation that can calculate the desire and willingness of individual and business to rebuild and restart their lives. For the dollar, a historic decline in GDP and further Fed actions are priced. In the last 2 weeks, the euro has gained 3.3% versus the dollar, the yen has risen 2%. If the GDP figures are better than expected, some profit taking might be in order. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD climbs further beyond 1.3000, highest since March 10, ahead of US GDP. http ntvforex.com News ID 0075CE. 2 minutes ago. By Haresh Menghani. GBP USD reversed an early dip to the 1.2965 region and turned positive for the 9th straight day. A sharp fall in the US bond yields, the impasse over the US fiscal stimulus, kept the USD rebound. Overbought conditions on the daily chart warrant some caution for bulls ahead of the US GDP print. The GBP USD pair rallied around 50-55 pips from daily swing lows and jumped back above the key 1.3000 psychological mark, hitting the highest level since March 10 in the last hour. As investors looked past a more dovish FOMC statement, the US dollar staged a modest rebound from 2-year lows and drove some haven flows amid a sharp turnaround in the global risk sentiment. This, in turn, exerted some pressure on the GBP USD pair, though the early downtick was quickly bought into near the 1.2965 region. A steep decline in the US Treasury bond yields kept a lid on the attempted USD recovery move. This, coupled with the impasse over the next round of the US fiscal stimulus measures, further held the USD bulls from placing any aggressive bets and extended some support, rather assisted the GBP USD pair to attract some dip buying. The pair moved into the positive territory for the 9th consecutive session and took along some short-term trading stops near the 1.3000 mark, setting the stage for additional gains. However, overbought conditions on the daily chart warrant some caution before positioning aggressively for any further appreciating move. Market participants now look forward to the U.S. economic docket, highlighting the release of the advance Q2 GDP report for a fresh impetus. The world's largest economy is expected to have collapsed by a record 34.1% annualized pace during the second quarter of 2020. Any significant divergence from the expected number will influence the USD price dynamics and produce some meaningful trading opportunities around the GBP USD pair. Technical levels to watch. GBP USD. Overview. Today last price. 1.3019. Today daily change. 0.0022. Today daily change percent. 0.17. Today daily open. 1.2997. Trends. Daily SMA 20. 1.2656. Daily SMA 50. 1.2541. Daily SMA 100. 1.2412. Daily SMA 200. 1.2702. Levels. Previous daily high. 1.3014. Previous daily low. 1.2912. Previous weekly high. 1.2804. Previous weekly low. 1.2518. Previous monthly high. 1.2813. Previous monthly low. 1.2252. Daily Fibonacci 38.2%. 1.2975. Daily Fibonacci 61.8%. 1.2951. Daily Pivot Point S1. 1.2935. Daily Pivot Point S2. 1.2873. Daily Pivot Point S3. 1.2833. Daily Pivot Point R1. 1.3036. Daily Pivot Point R2. 1.3076. Daily Pivot Point R3. 1.3138. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD slides further below mid 0.7100s. Fresh session low. http://ntvforex.com news ID 01AFA5 0712 GMT. By Haresh Menghani. AUD/USD retreats from the post-Fed swing high to 15-month tops. A modest USD rebound was seen as a key factor exerting pressure. Investors now eye advance US Q2 GDP report for a fresh impetus. The AUD/USD pair added to its intraday losses and refreshed daily lows, around the 0.714035 region during the early European session. The pair failed to capitalize on this week's positive move and witnessed a turnaround from the 0.7200 neighborhood, or 15-month tops set on Wednesday in reaction to a more dovish FOMC statement. As was widely expected, the Fed decided to leave its benchmark rate unchanged at 0.25% and pledged to keep rates near zero until it is confident that the economy has weathered the recent events. As investors looked past the key event, the US dollar staged a goodish intraday rebound from more than two-year lows and prompted some fresh selling around the AUD/USD pair. Adding to this, a weaker tone surrounding the U.S. equity futures underpinned the greenback's relative safe haven status and further collaborated towards driving flows away from the perceived riskier Australian dollar. The Aussie was also pressured by Thursday's weaker than expected domestic data, which showed that building approvals fell to an 8-year low in June. In fact, approvals for the construction of new homes were down 4.9% during the reported month. The reading was better than the 15.8% slump recorded in the previous month but was worse than the 2% decrease anticipated by the market. Meanwhile, the impasse over the next round of the U.S. fiscal stimulus measures might cap the attempted USD recovery. It is worth reporting that the U.S. congressional Republicans and Democrats have been struggling to reach a deal ahead of some earlier measures that expire this week. This, in turn, should hold the USD bulls from placing aggressive bets and help limit losses for the AUD/USD pair. Hence, it will be prudent to wait for some strong follow-through selling before confirming that the pair might have already topped out near the 0.7200 mark and positioning for any meaningful corrective slide. Market participants now look forward to the U.S. economic docket, highlighting the advance Q2 GDP report. The world's largest economy is anticipated to have collapsed by a record 34.1% during the second quarter of 2020. The data will play a key role in influencing the USD price dynamics and produce some meaningful trading opportunities later during the early North American session. Technical levels to watch. AUD/USD. Overview. Today last price. 0.7145. Today daily change. 0.0042. Today daily change percent. 0.58. Today daily open. 0.7187. Trends. Daily SMA 20. 0.7028. Daily SMA 50. 0.691. Daily SMA 100. 0.6592. Daily SMA 200. 0.6695. Levels. Previous daily high. 0.7197. Previous daily low. 0.7148. Previous weekly high. 0.7184. Previous weekly low. 0.6972. Previous monthly high. 0.7065. Previous monthly low. 0.6648. Daily Fibonacci 38.2%. 0.7178. Daily Fibonacci 61.8%. 0.7167. Daily Pivot Point S1. 0.7158. Daily Pivot Point S2. 0.7129. Daily Pivot Point S3. 0.7109. Daily Pivot Point R1. 0.7207. Daily Pivot Point R2. 0.7226. Daily Pivot Point R3. 0.7256. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. WTI price analysis nosedives to sub $39 levels, fresh monthly lows. http ntvforex.com news ID 0207AD. 6 minutes ago. By Haresh Menghani. WTI crude oil prices witnessed some aggressive selling during the early North American session. The steel intraday decline confirmed a breakthrough a one-month-old ascending trend channel. A subsequent fall below the key $40 psychological mark added credence to the bearish break. WTI crude oil prices finally broke down of its weekly trading range and nosedived to one-month lows, below the $39 mark during the early North American session. The sharp intraday fall confirmed a near-term bearish break below a one-month-old ascending trend channel and took along some short-term trading stops near the key $40 psychological mark. This, in turn, prompted some aggressive technical selling and was seen as a key factor behind the latest leg of a steep decline witnessed over the past hour or so. Meanwhile, technical indicators on the daily chart have just started drifting into the bearish territory and support prospects for an extension of the ongoing downfall. However, oscillators on hourly charts are already flashing extremely oversold conditions and warrant some caution before placing fresh bearish bets, or positioning for further weakness. Hence, it will be prudent to wait for some near-term consolidation or a modest rebound, which might still be used as a selling opportunity. Nevertheless, the commodity now seems vulnerable to slide further towards retesting sub $37 level, or support near the $36.80 region. WTI 4-hourly chart. Technical levels to watch. WTI. Overview. Today last price. 39.36. Today daily change. 2.05. Today daily change percent. 4.95. Today daily open. 41.41. Trends. Daily SMA 20. 40.88. Daily SMA 50. 38.77. Daily SMA 100. 32.04. Daily SMA 200. 43.78. Levels. Previous daily high. 41.66. Previous daily low. 41.03. Previous weekly high. 42.52. Previous weekly low. 39.99. Previous monthly high. 41.65. Previous monthly low. 34.45. Daily Fibonacci 38.2%. 41.42. Daily Fibonacci 61.8%. 41.27. Daily Pivot Point S1. 41.07. Daily Pivot Point S2. 40.74. Daily Pivot Point S3. 40.44. Daily Pivot Point R1. 41.71. Daily Pivot Point R2. 42. Daily Pivot Point R3. 42.34. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Cryptocurrencies price prediction: Bitcoin, Ethereum Classic, Amptron, Asian Wrap, July 30. http://ntvforex.com. News ID 03C36B. 41 minutes ago. Bitcoin price forecast: BTC USD faces strong resistance up front. BTC USD fell from $11,908.70 to $11,097.65 in the early hours of Thursday. The daily confluence detector shows one strong resistance and support level at $11,400 and $11,050. The $11,400 resistance level has the 1-week Fibonacci 161.8% retracement level. Ethereum Classic Market Outlook etc. USD must overcome $7.34 resistance to reach $7.50 zone. Etc. USD bears took control of the market after 3 consecutive bullish days, taking down the price from $7.27 to $7.18. The daily confluence detector has one strong resistance and support level at $7.34 and $6.90, respectively. Tron Technical Analysis: TRX USD aims for 2 cents level after a hat-trick of bullish days. TRX USD went up from $0.0192 to $0.01956 as the buyers aim for the 2 cents psychological level. The bulls have stayed in control for the third straight day after bouncing up from the $0.01857 support level. TRX USD has jumped above the 20-day Bollinger Band. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bonds are 0.15 higher at 181.27. Analysis.http://ntvforex.com. News ID 0464AF. 7/30/2023 13:01 p.m. Financials as of this writing: 5:00 a.m. September. Bonds are 0.15 higher at 181.27, 10-year notes 0.4 higher at 139.28.0 and 5-year notes 0.1 higher at 125.31.5. Yields are slightly lower at 0.12 for the 2-year, 0.24 for the 5-year, 0.56 for the 10-year and slightly higher on the 30-year at 1.26. Yesterday the FOMC left rates unchanged and warned of long-term rates of near zero for some time to come and cautioned of negative economic impact to the COVID virus. I still believe in the upside to these markets and the possibility of negative rates. Keep in mind we are near all-time lows. Yield of the 10-year note of 0.547. GNP and initial job claims this morning. Grains December. Corn is currently 0.4 lower at 326.0, September beans up 1.2 at 882.4 and September wheat down 6.6 at 526.4. All down 10 cents for the week. Near perfect growing weather and weak exports added pressure to these markets. Last week I tried the long side of corn on a break and will use a stop in the 320.0 area basis December. Cattle live and feeder cattle have worked higher over the last week due to a constructive cattle on feed report and an increased demand as evidenced by high select cuts of beer and lower choice prices. Lower feed prices added pressure to the upside of feeders. All that being said, I remain negative feeders as long as December. Corn stays above 320.0. Silver September silver is 88 cents lower at 23.44 and up 1.00 for the week. During the last week we saw a high of 26.27 and a low below 23.00. The high of 26.27 reeks of short covering. I will be a buyer below 20.00. SAM PS September SAM PS are currently 30.00 lower at 3,217.00 after closing 40.00 higher yesterday. Fears of a negative GDP number is pressuring the market this morning. I am a seller on sharp rallies. Currencies: the September euro is 9 lower at 1.17285, the yen 4.5 lower at 0.95200, the pound 377 higher at 1.3064 and the dollar 5 higher at 93.485. We remain long the euro, long the pound and short the dollar index. These positions are beyond my expectations. Use close stops to protect profits. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Your JPY price analysis: further consolidation likely near term. http://ntvforex.com news ID 04FDCB. 3 minutes ago. By Pablo Piovano. Your JPY is prolonging the range-bound theme above 123.00. The key support area around 122.90 holds the downside so far. Your JPY now seems to have entered into a consolidative phase around the mid-123.00s in the unchanged context of firm JPY buying and despite the constructive view on the single currency. Extra upside momentum remains well on the cards in spite of the ongoing consolidation and is expected to target the 2020 peaks beyond the 124.00 mark in the short-term horizon. If sellers regain the upper hand, then the leg lower could test the short-term support line, today around 121.30. As long as your JP trades above the 200-day SMA at 119.97, the positive outlook is expected to remain unchanged. Your JPY daily chart. Your JPY overview. Today last price 123.46. Today daily change 52. Today daily change percent 0.21. Today daily open 123.72. Trends. Daily SMA 20 122.31. Daily SMA 50 121.21. Daily SMA 100 119.35. Daily SMA 200 119.99. Levels. Previous daily high 123.79. Previous daily low 123.02. Previous weekly high 124.29. Previous weekly low 122.2. Previous monthly high 124.43. Previous monthly low 119.32. Daily Fibonacci 38.2%. 123.5. Daily Fibonacci 61.8%. 123.31. Daily Pivot Point S1. 123.22. Daily Pivot Point S2. 122.73. Daily Pivot Point S3. 122.45. Daily Pivot Point R1. 124. Daily Pivot Point R2. 124.28. Daily Pivot Point R3. 124.78. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/JPY price analysis risks further falls amid rising channel breakdown. http ntvforex.com news ID 053A1D. 1 minutes ago. By Dwani Mehta. AUD/JPY falls in sync with risk appetite amid global growth woes. Rising channel breakdown spotted on the hourly chart. Hourly RSI peeps into the oversold region, eyes on US GDP. AUD/JPY, the fear gauge, tumbles in tandem with the risk appetite, as markets remain nervous amid devastating German Q2 GDP numbers and ahead of the US Q2 GDP report. The cross also tracks the sell-off in the S&P 500 futures, which are down 0.80% around 3,225, at the press time. Besides the unfavorable fundamentals, the technical outlook on AUD/JPY also remains bearish, with the further downside likely on the cards. The pair has charted a classic rising channel breakdown on the hourly sticks, calling for a test of the pattern target of near 74.50. Ahead of that level, the daily low of 74.89 could be tested. The hourly relative strength index RSI hovers around the entry point of the oversold territory, at 30.31, backing the case for additional weakness. Any pullback is likely to be short-lived and could face immediate hurdle at 75.14, the pattern support turned resistance. Acceptance above which will challenge the powerful resistance at 75.28, the confluence of the 50 and 100 HMAs. The bearish bias will remain intact as long as the spot holds below the horizontal 21 HMA at 75.34. AUD/JPY hourly chart. AUD/JPY additional levels. AUD/JPY. Overview. Today last price. 75.01. Today daily change. 0.42. Today daily change percent. 0.56. Today daily open. 75.42. Trends. Daily SMA 20. 75.07. Daily SMA 50. 74.15. Daily SMA 100. 70.89. Daily SMA 200. 72.49. Levels. Previous daily high. 75.52. Previous daily low. 75.16. Previous weekly high. 76.88. Previous weekly low. 74.82. Previous monthly high. 76.79. Previous monthly low. 71.61. Daily Fibonacci 38.2%. 75.38. Daily Fibonacci 61.8%. 75.29. Daily Pivot Point S1. 75.21. Daily Pivot Point S2. 75. Daily Pivot Point S3. 74.85. Daily Pivot Point R1. 75.57. Daily Pivot Point R2. 75.72. Daily Pivot Point R3. 75.93. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Ample fourth technical analysis. AMPL USD down 80% in the last 4 days. http ntvforex.com news ID 053D67. 1 minutes ago. AMPL USD peaked at $4.07 after a massive rally. The digital asset is down 86% from its all-time high, but this was expected due to AMPL's mechanism. Ampleforth was one of the best performing altcoins in the market with a massive increase in market capitalization thanks to its unique design. The supply of AMPL is actually elastic, which means it can expand or contract based on demand. The mission of the protocol is to reduce volatility, but AMPL is not a stable coin. AMPL USD daily chart. Obviously, the token is crashing heavily. However, technical analysis doesn't work in the same way for AMPL as its supply changes all the time. The daily RSI is oversold and indicates that AMPL is ready for a bounce. AMPL is currently trading at 79 cents, its lowest point since March 2020. However, the overall trading volume is significantly higher now. When the price is high, wallet balances automatically increase. When the price is low, wallet balances automatically decrease. This supply adjustment operation happens once per day and is called a rebase. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin entered Wave 4 and offered buying opportunity. http ntvforex.com news ID 05C053. 4 minutes ago. In this technical blog, we are going to take a look at the past performance of the 1-hour Elliott wave charts of Bitcoin ticker symbol $TGUSD. In which, the rally from June 27, 2020 low $8,830 showed an impulse rally higher favored more upside extension to take place. Also, the right side tag pointed higher AMP favored more strength. Therefore, we advised our members to buy the DIPs in Bitcoin in 3, 7, or 11 swings at the blue box areas. We will explain the structure AMP forecast below. Bitcoin 1-hour Elliott wave chart. Bitcoin 1-hour Elliott wave chart from 7/28/2020 London update. In which, cryptocurrency is showing an impulse rally with extended wave 3. Whereas Wave I ended at $9,690. Wave 2 pullback ended at $9,504 low and Wave 3 ended at $11,417 high. Down from there, Bitcoin entered Wave 4 pullback to correct the short-term cycle from $9,504 low. The internals of that pullback unfolded as a zigzag structure where lesser degree Wave A ended at $10,816 low. Wave B ended at $11,263 high and Wave C managed to reach the blue box area at $10,695, $10,341, 100%, 161.8% Fibonacci extension area of AB. From there, the pair was expected to resume for Wave V or for 3-wave reaction higher at least. Bitcoin 1-hour Elliott wave chart. Here's latest 1-hour Elliott wave chart from 7/30/2020 Asia update. In which, Bitcoin is showing reaction higher taking place from the blue box area. Allowed members to create risk-free positions shortly after taking the long positions. However, a break above $11,417 high still needed to confirm the Wave V AMP a possible extension towards $11,614, $11,933 target area. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. ASX 200 index takes its cues from Wall Street Post dovish Fed. http ntvforex.com news ID 068449. 32 minutes ago. By Ross J. Berland. The Fed is totally focused on providing the economy with the support it needs, stocks cheer. ASX 200 index follows the lead of US stocks and rises to the occasion. The ASX 200 index is trading up 0.63%. The Australian share market was poised for a strong opening on the back of the Federal Reserve, and it has not disappointed. At the time of writing, the ASX 200 index is trading up 0.63% at 6,044 in a range of 6,006.40 and 6,052.20. Markets were in high anticipation of the Fed this week, which vowed to keep using its full range of tools to prop up the pandemic-stricken U.S. economy, sending Wall Street higher into the close. There were no major surprises, and the central bank held policy settings practically unchanged. Fed committed to using its full range of tools to support the U.S. economy. The long and short of the event is that the Fed is committed to using its full range of tools to support the U.S. economy. In the press conference, the chairman, Jerome Powell, stressed the uncertain economic outlook and noted a slowdown indicated by the high-frequency data. He said the Fed is totally focused on providing the economy with the support it needs, and the economy will likely need the highly accommodative policy for an extended period. Wall Street was content with the meeting and outcome, and U.S. stocks have buoyed sentiment in Asia. Meanwhile, while a strong performance from domestic iron ore miners also boosted domestic stocks. Heavyweights Rio Tinto and Fortescue Metals Group FMG beat expectations to post solid results as demand recovers in China for the steel-making material. Financials were also rising to the occasion with a 1% spike, with the Big Four banks all trading in positive territory. US tech giants have also lifted the Australian technology complex, with the AXIJ the following suit to put on as much as 2.5% and mark their best session more than a week. ASX 200 index extending the daily correction. The index is trading in a bearish wedge formation and is resisted in the 6,150s. The index has completed a 61.8% Fibonacci of the 2020 route, which could be respected to hold the corrective progress. To the downside, 5,890 guards 5,721 June corrective lows. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. The Cantillon effect: greater inequality surely lies ahead. Analysis. http ntvforex.com news ID 06A150. 7/30/2023 10:27 p.m. Main Street, we have a problem. The idea that central banks increase wealth inequality is often seen as a philosophical argument. In reality, the data is now in complete support of this as a fact. With money velocity declining severely in the real economy since the pandemic began, we are also seeing the M2 money supply increasing at record speeds. With more available credit in the banking system M2, how can velocity still be trendline downward? The reason is more credit is being created through bank lending, but the money is flowing into fewer and fewer bank accounts together. The charts below paint a bleak picture. The monetary policies being enacted worldwide will be increasing wealth inequality at a record pace. They will continue to do so unless the methods used by central banks change. The public will need to become aware of the negative effects of this squeeze before changes can be made in support of a more fair financial system. This brings us to a little spoken of theory, one with massive consequences reaching far beyond just the realm of financial markets. This is known as the Cantillon effect. Sadly, global monetary policy is on track to make this phenomenon a progressively larger burden for the working class in society. Below is a visual I've created to outline the real flow of newly created money in the economy. The Cantillon effect is no new idea, it was coined in the 1700s when the economist Richard Cantillon first identified how interference in the money supply can give an unfair advantage to the individuals who are the first to receive new currency. When a central bank injects digitally printed money, to use the famous words of Jerome Powell, into the economy, there is only one singular injection point. The central bank simply credits the accounts held by primary dealer banks under its umbrella. In contrast, when fiscal policy is used to spend, those funds will be directly allocated to whomever policy makers have specified as the recipient in their spending bill. In 2020, central banks will leverage their funding from policy makers to inject new currency and liquidity into financial markets by adding to primary dealer banks' reserves. Once the central bank has credited the large commercial banks, those banks then leverage the currency once more in the process of lending to corporations and individuals. By the time this new currency is flowing into the real economy, it is massively inflated. Therefore, the large banks and corporations are benefiting to a much greater degree than the economy as a whole. I examine the Cantillon effect while contrasting Wall Street and Main Street, in order to illustrate how the two will be diverging from one another for as long as this method of currency liquidity injection remains the policy tool of choice. Understanding this flow of liquidity is absolutely necessary if one hopes to structure a portfolio which can preserve wealth. Just think of where the money will be headed first. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP/USD forecast falling out of the channel has good reasons, and more may come. Analysis. http://ntvforex.com News ID 07431 7/30/2020 7:16 AM. GBP/USD has been on the back foot following the worried Fed decision. US GDP, jobless claims, and new UK coronavirus regulations are in play. Thursday's 4-hour chart is showing the currency pair has dropped off the uptrend channel. 10 days instead of 7 of self-isolation in case of showing coronavirus symptoms. That is likely to be the new announcement from the British government, and GBP/USD is also confined under 1.30. The Federal Reserve's dovish decision triggered a false break above 1.30 as expected, and the downfall is sending it below the uptrend channel. What did the Fed do? The world's most powerful central bank left its policy unchanged but painted a gloomier picture of the economy. Jerome Powell, chairman of the Federal Reserve, said that high-frequency data is softer since coronavirus cases increased from mid-June. The dollar initially advanced as the bank reiterated its commitment to using all its tools, but fell short of hinting at specific measures. Powell stressed that the Fed has lending powers but spending ones, adding on pressure for politicians to get their act together. CFOMC and Chairman Powell doing the COVID limbo. Federal unemployment benefits are set to expire shortly at the end of July with no extension or replacement agreed. Democrats and Republicans are tussling over the next relief package, and recent statements suggest disagreements are substantial. Consumption already falling could further suffer if those out of work have fewer dollars in their pockets. Updated jobless claims figures will likely show ongoing high numbers in both initial and continuing applications, potentially pushing the safe haven dollar higher. Markets are set to focus on the first release of second quarter gross domestic product, and a disaster is on the cards. While the world's largest economy bounced back in May and most of June, the collapse in activity in April has likely left a stark mark. Economists expect a historic contraction of 34.1% annualized. See US Q2 GDP preview. Are there any shocks left? The range of economists' estimates is broad and implies surprises may be substantial, potentially triggering high volatility. In general, a better than predicted figure could be shrugged off as more recent data is pointing lower. Moreover, the Fed's gloomy message is also hanging over investors' heads, reducing any enthusiasm. Apart from the quarantine restrictions, nothing has materially changed in the UK. Brexit talks are stuck, relations with China remain tense, and the gradual recovery is fragile. Overall, there is more room to the downside than to the upside in cable. GBP/USD technical analysis. Pound dollar has slipped off the uptrend channel that had accompanied in the past week a bearish sign. While momentum on the 4-hour chart remains positive, the relative strength index is still close to 70, potentially entering overbought conditions upon any small rise. Support awaits at 1.2910 and 1.2845, both serving as stepping stones on the way up. The next line to watch is 1.2775, which separated ranges late last week. Initial resistance is at 1.2975, which temporarily held sterling down on Thursday, and then the recent peak of 1.3010. Further above, 1.3070 and 1.3120 await GBP/USD. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Pelosi responded Trump's idea of moving the November elections, congressional authority needed to do so. http://ntvforex.com News ID 08E1EE. 6 minutes ago. By Ross J. Berland. The Hill reported that Speaker Nancy Pelosi responded to President Trump's tweet floating the idea of moving the November elections by tweeting a quote from the Constitution that cites the congressional authority needed to do so. Article 2, Section 1 of the Constitution states the Congress may determine the time of choosing the electors, and the day on which they shall give their votes, which day shall be the same throughout the United States, Pelosi tweeted Thursday. Pelosi's tweet was in response to Trump's tweet from earlier in the day floating the idea of moving Election Day, which as president he lacks the power to do unilaterally. He also again slammed mail-in voting, with baseless claims that it leads to voter fraud. With universal mail-in voting, not absentee voting, which is good, 2020 will be the most inaccurate and fraudulent election in history. It will be a great embarrassment to the USA. Delay the election until people can properly, securely, and safely vote. Donald J. Trump at Real Donald Trump, July 30, 2020. Market implications. The U.S. markets did not like this tweet one bit, and the U.S. dollar, which is under immense pressure, is under extreme scrutiny. DXY dollar liquidity plentiful thanks to the Fed, markets increasingly bearish on U.S. outlook. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Altcoin price analysis. Bitcoin Cash, Tezos, and IOTA BCH/USD and IOTA/USD look to break past key levels. http://ntvforex.com News ID 09411E. July 29, 23:49 GMT. BCH/USD bulls aim for the $300 psychological level. IOTA/USD bulls aim for the 30 cents psychological level. XTZ/USD trends in a downward trending channel. BCH/USD daily chart. BCH/USD bulls stay in control for the third straight day as the price went up from $289.50 to $291. The MACD shows increasing bullish market momentum. Healthy support lies at $273.35, SMA 200, $256.50, $248.35, $241 SMA 20 and $236.20 SMA 50. XTZ/USD daily chart. XTZ/USD is trending in a downward channel formation. The price dropped from $2.842 to $2.787. The Williams S% has dipped into the oversold zone and Elliott oscillator has had 4 straight red sessions. These two indicators show that the market sentiment is presently bearish. IOTA/USD daily chart. IOTA/USD bulls took charge and bouncing up from the upward trending line, going up from $0.2737 to $0.286. The MACD shows sustained bullish momentum, while the RSI has dipped into the overbought zone. The price has healthy support levels at $0.279, $0.268, $0.259 SMA 20 and 24 cents SMA 50. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD prints fresh highs, bulls seeking a break towards 1.33 in near future. http://ntvforex.com news ID 09A2EB. 2 minutes ago. By Ross J. Berland. After piercing post-Brexit support at 1.20 to a low of 1.15, GBP USD has re-entered the 1.20–1.33 trading range. GBP USD is currently trading at fresh highs in the 1.30s as the market beats down the greenback a little more despite yesterday's relief rally following the Federal Reserve announcements. GBP USD is testing the 1.3080s, higher by 0.65% on the session so far, having rallied from a 1.2944 low. Broad USD weakness, weighed by concerns over fiscal commitment and monetary policy space in the US, has benefited GBP for the 10th day straight. There are a number of factors to consider, with the euro creeping up on a critical 1.1850 area also. Besides the data today rattling markets, both German and US gross domestic produce, downside surprise for Germany, unprecedented, but expected for the US and US jobless claims, rising for the second week in a row and reinforced the COVID-19 fear factor, US President Donald Trump tweeted. President Trump's tweets have in the past been one to watch for until the markets became immune to the contact barrage of provocative messages towards China at the height of the tariff war between 2018 and mid-2019. However, in an unprecedented move, markets took note of today's tweet when Trump raised the possibility of delaying the U.S. presidential election scheduled for November. Trump, without evidence, repeated his claims of mail-in voter fraud and raised the question of a delay, writing in a post on Twitter, "Delay the election until people can properly, securely, and safely vote." In response, as CNN reports, a large number of congressional Republicans, including members of House and Senate leadership, openly rejected President Donald Trump's suggestion Thursday that November's presidential election should be delayed, a move that the president would have no authority to make because the Constitution gives Congress the power to set the date for voting. Positive pints on trade talks with EU. Meanwhile, GBP has gained support from progress in trade talks with the EU in July, even though the two parties remain far apart. Analysts at ANZ Bank explained that on the positive side, the EU has agreed to an arbitration process for dispute resolution following earlier hints at a willingness to explore a softer stance on state aid rules and possibly fisheries. The UK, meanwhile, has conceded to one overall agreement rather than various sectoral agreements and has also committed to remaining in the European Convention on Human Rights. However, there hasn't been any notable progress on level playing field arrangements and on fisheries. Domestically, fiscal policy is modestly expansionary in the UK. The analysts at ANZ expect the additional fiscal support of GBP 30B and 1.5% of GDP outlined in July to be added to the autumn budget. Record low gilt yields indicate no funding stress, in contrast to the sell-off in March. We have turned modestly positive in GBP through 2021. GBP USD levels. Overview. Today last price. 1.3078. Today daily change. 0.0081. Today daily change percent. 0.62. Today daily open. 1.2997. Trends. Daily SMA 20. 1.2656. Daily SMA 50. 1.2541. Daily SMA 100. 1.2412. Daily SMA 200. 1.2702. Levels. Previous daily high. 1.3014. Previous daily low. 1.2912. Previous weekly high. 1.2804. Previous weekly low. 1.2518. Previous monthly high. 1.2813. Previous monthly low. 1.2252. Daily Fibonacci 38.2%. 1.2975. Daily Fibonacci 61.8%. 1.2951. Daily Pivot Point S1. 1.2935. Daily Pivot Point S2. 1.2873. Daily Pivot Point S3. 1.2833. Daily Pivot Point R1. 1.3036. Daily Pivot Point R2. 1.3076. Daily Pivot Point R3. 1.3138. As for forecasts, the analysts at ANX are bullish. We see a gradual appreciation path for the currency, with GBP/USD ending this year at 1.31 before heading to 1.37 by end 2021. The pair is now testing the downward sloping resistance line which has been in place this year, a break of which will see the pair heading toward 2-year barrier at 1.33. We expect the latter to be eventually taken out by mid-2021. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Global Recession, Canada's Economy and Dollar in Focus Video Analysis. http://ntvforex.com. News ID 0A25C7. 7/30/2026 47:06 am. Since the outbreak of the pandemic, it's well known that every major central bank has been injecting record amounts of liquidity into markets in hopes of maintaining stability and liquidity. However, we find that all too often analysts forget to look past the big four central banks: US Fed, ECB, BOJ, BO. The Bank of Canada's monetary interventions in 2020 have been flying under the radar. Below, we created visualizations to represent the position Canada finds itself in today. Firstly, notice the composition of Canada's GDP. The oil-reliant nation will be facing a tough road ahead, as the three largest components of economic output are to be impacted in the future by the pandemic. Canada's oil industry has been lagging its competitors for years. Long before anyone heard of a virus called COVID-19, Canadian crude was selling at a fraction of the price compared to WTI. This is due to the fact that the cost of shipping Canadian oil to refineries makes it much less economically viable than, say, Saudi or Russian oil. With little hope for a pipeline linking Alberta's tar sands to the southern United States, Canada's policy makers will need to get creative if they hope to replace the loss in productivity which is surely going to drag on the energy sector as the globe recovers from the deep recession of 2020. Second, we can say with confidence that given Canada's GDP composition, the nation's economy will rebound much slower than other G20 powers. This statement is hard to argue, given that on top of Canada's oil woes they also have one of the most levered financial systems. In the chart below Canada's GDP composition, we can see that real estate and construction also account for a huge portion of Canada's GDP. Compared to the United States, Canada is approximately twice as reliant on construction for jobs and much more reliant on real estate as an economic growth driver. We expect the negative ripple effects from Canada's faltering oil and gas sector to be compounded by the overdependence on real estate and construction in the economy. Together, the factors outlined in Chart 1 will certainly pose a significant problem for Canada's banks, which happen to be very heavily exposed to credit losses in these big three industries in Canada. Without going into too much detail, Canada is likely to also experience a drag on its economic recovery due to the fact that its households are more indebted than ever before, with one of the most highly leveraged households in the G20. If taxes were to rise in response to huge fiscal spending bills, Canadians could be facing years of financial hardships. Third, and perhaps most importantly, the Bank of Canada's balance sheet. Chart 2 largely speaks for itself, with a shocking amount of central bank stimulus being needed to prop up the Canadian economy. As a percentage of GDP, the BOC's balance sheet has ballooned to over 30%, compared to just 7% pre-pandemic. Add to the staggering BOC balance sheet expansion the fact that Canada's fiscal deficit will be at least 20% of GDP this year, and we need not go into further detail to understand why there may be some serious implications for the Canadian dollar in the coming months and years. Conclusions. What do these charts mean for the CAD? For a Canadian citizen like myself, there is certainly more than enough reason to be worried. The loonie is at risk of increased volatility at the very least, and a serious lack of foreign demand due to a depleted oil and gas sector. The Bank of Canada has increased its balance sheet at the fastest pace since the pandemic began in comparison to the most liquid global fiat currencies. It will certainly be worth paying close attention to Canadian Parliament's fiscal actions in the coming months and years. There are likely to be opportunities to short the CAD against currencies whose central banks have not debased as aggressively. Moreover, Canadian businesses and citizens are likely to be faced with the threat of decreased purchasing power abroad. For reference, here is a chart of the USD-CAD exchange rate, where we can see the current zone will be a key juncture to set the direction for price action in the short to medium term. Oh, and one more thing, the Bank of Canada also sold off all of its gold reserves in 2015. Yes, Canada has zero gold saved for a rainy day. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US 1.43 million Americans applied for unemployment benefits last week. http://ntvforex.com news ID 0B2540. 4 minutes ago. By Aaron Sengezer. Weekly initial jobless claims in US increased by 12,000. US dollar index stays in positive territory above 93.50. There were 1,434,000 initial claims for unemployment benefits in the U.S. during the week ending July 25, the data published by the U.S. Department of Labor DOL revealed on Thursday. This reading followed the previous week's print of 1,422,000 revised from 1,416,000 and came in slightly better than the market expectation of 1,450,000. Market reaction. This data doesn't seem to be having a significant impact on the USD's performance against its rivals. As of writing, the US dollar index was up 0.29% on the day at 93.53. Additional takeaways. The 4-week moving average was 1,368,500, an increase of 6,500 from the previous week's revised average. The advanced seasonally adjusted insured unemployment rate was 11.6% for the week ending July 18, an increase of 0.5 percentage point from the previous week's unrevised rate. The advance number for seasonally adjusted insured unemployment during the week ending July 18 was 17,018,000, an increase of 867,000 from the previous week's revised level. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis $1,972.50 to guard the upside. Eyes on US Q2 GDP confluence detector. http://ntvforex.com news ID 0B5ADC. 1 minutes ago. By Dwani Mehta. Gold XAU USD consolidates the post-Fed decision volatility, having faced rejection just below the record high of $1,981.34. Investors resort to profit-taking after the dovish Fed-induced surge. The bias, however, remains in favor of the bulls, as the U.S. 10-year real yields meander near new lifetime lows of 0.95%. The Fed pledged to keep the monetary policy accommodative to fight the coronavirus impact on the economy, boosting the yieldless gold at the expense of the real rates and the U.S. dollar. Attention now turns towards the critical U.S. Q2 preliminary GDP report for fresh trading impetus on the yellow metal. Let us take a look at how it is positioned technically ahead of Thursday's key event risk. Key resistances and supports. The tool shows that the bright metal sees the immediate upside capped at the powerful resistance of $1,972.50, the intersection of the Fibonacci 23.6% one-day, previous week high 4-hour and pivot point 1-week R2. Ahead of that key support, the bears could test the downside cushion at $1,943, which is the confluence of the SMA 10 4-hour and SMA 50 1-hour. A break above the latter will open doors for a retest of the all-time highs near $1,981. Buyers will then aim for the next hurdle at $1,988, which is the pivot point one-day R1, on its way to the $2,000 level. Alternatively, the bears are likely to have a tough time extending its control, as a cluster of minor support levels will impede gold's corrective decline. The immediate cushion is seen at $1,960.55 region, the convergence of Bollinger Band one-day upper, Fibonacci 61.8% one-day and SMA 10 4-hour. A failure to resist above that level, the $1,949 support will be put to test, the pivot point one-day S1. Here is how it looks on the tool. About the confluence detector. The confluence detector finds exciting opportunities using technical confluences. The TC is a tool to locate and point out those price levels where there is a congestion of indicators, moving averages, Fibonacci levels, pivot points, etc. Knowing where these congestion points are located is very useful for the trader, and can be used as a basis for different strategies. Learn more about technical confluence. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin Technical Analysis. BTC USD Daily Bull Flag should break out towards $12,000. http://ntvforex.com News ID 0D023C. 3 minutes ago. BTC USD is trading around $11,000 without any major changes. The daily bull flag is the most important pattern to follow in the short term. After its initial breakout, Bitcoin has continued to trade above $10,000 and closed above $11,000 on July 29. Trading volume is slowly decreasing and EMAs are catching up with the current price. BTC USD Daily Chart. Bitcoin price hasn't changed much while investors figure out what's the next move for Bitcoin. According to statistics from BitMEX, there are 86% long positions vs 13% short positions. Longs are worth $350 million in Bitcoin while shorts are only $55 million. This disparity is even higher for ETH, which has around 94% in longs. BTC 4 US dollars hour chart. For the most part, the 4-hour chart has been sideways with Bitcoin losing the 12 EMA briefly. The 26 EMA will be a crucial support level to defend. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD analysis struggles to find acceptance above 1.3000. US GDP eyed for fresh impetus analysis. http://ntvforex.com News ID 0E6D90. 7/30/2026 32:06 AM. Broad-based USD weakness assisted GBP USD to continue gaining traction on Wednesday. Dovish Fed, Uncertainty over the next round of the U.S. fiscal stimulus weighed on the USD. Profit-taking kicks in on Thursday amid a modest USD bounce, ahead of the US GDP report. The GBP-USD pair prolonged its recent strong bullish momentum and continued scaling higher on Wednesday amid the emergence of some fresh US dollar selling. The pair moved back above the key 1.30 psychological mark during the U.S. session after the Fed delivered a more dovish message. As was widely expected, the U.S. central bank decided to leave the Fed funds target rate unchanged at 0.25%. The Fed also pledged to keep rates near zero until it is confident that the economy has weathered the recent events and is on track to achieve its maximum employment and price stability goals. The accompanying policy statement indicated that members tied the pace of recovery on the developments surrounding the coronavirus pandemic. In the post-meeting virtual press conference, the Fed Chair Jerome Powell that there are signs that the continuous increase in COVID-19 cases is weighing on the economic activity and reiterated to use a full range of tools to support the economy. The dovish outlook comes amid the impasse over the next round of U.S. fiscal stimulus measures, which continued weighing on the greenback and remained supportive of the bid tone surrounding the measure. As investors looked past the FOMC policy update, the USD staged a modest bounce from over two-year lows and exerted some pressure on the pair during the Asian session on Thursday. In the absence of any major market-moving economic releases from the UK, the USD price dynamics will play a key role in influencing the pair's momentum. Meanwhile, the U.S. economic docket highlights the release of the advanced GDP report, which is expected to show that the economy collapsed by a record 34.1% during the second quarter of 2020. The data will produce some meaningful trading opportunities later during the early North American session. Short-term technical outlook. From a technical perspective, the upward trajectory stalled near a resistance marked by the top end of a near 3-month-old ascending trend channel. The mentioned barrier is pegged near the 1.3025 region, which should now act as a key pivotal point for short-term traders. A convincing breakthrough will be seen as a fresh trigger for bulls and set the stage for a move beyond the 1.3065 intermediate hurdle, towards reclaiming the 1.3100 round figure mark. On the flip side, any meaningful pullback now seems to find immediate support near the 1.2900 mark. Some follow-through weakness might prompt some technical selling, though the corrective slide might still be seen as a buying opportunity. This, in turn, might help limit the downfall near the June swing high resistance breakpoint, around the 1.281510 region. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. second quarter GDP collapses 32.9%. Virus lockdowns set dismal economic record analysis. http://ntvforex.com News ID 0ed4f7. 7/30/2020 7:24:36 p.m. Annualized U.S. GDP falls 32.9% in the second quarter as virus cripples economy. GDP decline was the most in a century of records but less than the 34.1% forecast. Initial jobless claims rise for the second week and continuing claims increase. High-frequency data shows a slowdown in economic activity. Equities, credit yields and the dollar fall after release. The COVID pandemic and its attendant closures have plunged the U.S. economy into its fastest and deepest decline in history, worse even than the Depression or the financial crisis. Gross domestic product fell 32.9% on an annualized basis in the second quarter, according to the first release from the Commerce Department. This estimate will be revised twice at 1-month intervals. Economists in the Reuters survey had forecast a 34.1% decline. The drop from the prior quarter was 9.5%. U.S. GDP. NTV Forex. This recession began in March when economic activity collapsed as much of the country was locked in, and the downturn was enough to drag the entire quarter, which had been expanding at about 3% in January and February, down to 5% for the 3 months. In comparison, the worst quarter of the financial crisis saw an 8.4% drop at the end of 2008, and in the first 3 months of 1958 GDP fell 10%. GDP composition. Personal spending, which normally comprises about 70% of US GDP, subtracted about 25% from second quarter, with the service sector accounting for the majority of the decline as people stayed at home for 2 months, all but ending health care, recreation, dining and entertainment spending. Overall consumer spending fell at a 34.6% annual rate in the second quarter. There were also sharp contractions in the other major GDP categories of business investment and net exports. Business purchases for research, equipment, and construction dropped at a 27% annual rate. Federal government spending rose as stimulus and unemployment benefits were paid. Jobless claims. An increase in initial jobless claims in the last 2 weeks suggests that the rising number of COVID cases in a number of states is having an impact on the labor market. Claims climbed to 1.434 million in the July 24th week after reversing 15 weeks of improving figures on July 17th. The number of people receiving benefits increased by 867,000 to 17.018 million, the first gain since the week of May 22. Initial jobless claims. NTV Forex. Federal Reserve Chairman Jerome Powell noted yesterday in his news conference following the FOMC meeting that the pace of the recovery looks like it has slowed since the cases began to spike in June. Information from credit and debit card purchases show spending rising into early June and then flattening, with similar data on restaurants and bars. Not all consumer spending is slowing. Purchases of large ticket items that were deferred when the economy was shut, like homes, cars and large appliances, rose in June. Employment also jumped 4.8 million in June after adding 2.8 million in May. Non-farm payrolls are expected to add 2.260 million workers in July when it is reported on August 7. If accurate, the economy would have recovered about half of the jobs lost in April. Consumer confidence is starting to reflect the incomplete recovery. The 2 major surveys have declined in June, the Conference Board reading to 92.6 from 98.3 and the Michigan preliminary for July to 73.2 from 78.1 in June. Conclusion and markets. Though the second quarter GDP debacle was not quite as bad as forecast, when combined with the fading prospects for July as the pandemic continues to undermine growth, markets are beginning to price an extended and weak U.S. recovery. Treasury yields fell, with the 10-year shedding 4 points to 0.54% and the 2-year dropping 1 point to 0.121%. 3/5 PMI DT. 1 hour before the close, the Dow was off 254 points, 0.96%, and the S&P 500 was down 17 points, 0.49%. The dollar lost ground against the euro, which climbed above 1.1800 for the second day, the yen where it dropped below 105.00, and the sterling, which reached its highest since March 9. The Swiss franc climbed to its best level against the dollar since January 2015. The Aussie and the Kiwi were essentially unchanged. Only versus the Canadian dollar did the greenback rise. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price news and forecast. XAU/USD $1,972.50 to offer stiff resistance ahead of US Q2 GDP. http ntvforex.com. News ID 0F39EB 0437 GMT. By NTV Forex Team. Gold price analysis. $1,972.50 to offer stiff resistance ahead of US Q2 GDP. Gold XAU/USD consolidates the post-Fed decision volatility, having faced rejection just below the record high of $1,981.34. Investors resort to profit-taking after the dovish Fed-induced surge. The bias, however, remains in favor of the bulls, as the U.S. 10-year real yields meander near new lifetime lows of 0.95%. The Fed pledged to keep the monetary policy accommodative to fight the coronavirus impact on the economy, boosting the yieldless gold at the expense of the real rates and the U.S. dollar. Read more. Asia market July FOMC a convincing September curtain warmer. Reuters reported that Chinese regulators are trying to temper China gold fever. As we alluded to during the recent ramp to $2,000 futures, it was all in the price action and easily visible as recent SFE opening salvos on Monday, Tuesday, and last Wednesday showed China's retail army of traders caught a case of gold fever, spurred on by the deepening rift between the United States and China. Read more. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Asia market July FOMC a convincing September curtain warmer analysis. http ntvforex.com news ID 0FFD61. 7/30/2023 49:40 AM. U.S. equities were stronger Wednesday with the S&P up 1.2%. The Fed was in line with expectations, though that also meant a reiteration of the need for further monetary and fiscal support. It wasn't exactly the most riveting FOMC of recent times after the Fed let the cat out of the bag late Tuesday by pledging to extend its emergency programs, but it still managed to cross T's and outdove even the market's most dovish expectations. Investors liked what they heard from Chair Powell. Indeed, this is a Fed that appears to feel the pulse of the economy despite the meeting coming in line with expectations and offering no new policy announcements. However, it did provide a suitable curtain warmer for a more resultant meeting in September. The FOMC statement was mostly unchanged, except for the inclusion of a factor that underscored the gravity the evolvement of the virus would have on the economic outlook, a theme that was reinforced in the press conference as the chair noted that there is evidence that the pace of the recovery has slowed since mid-June due to virus concerns. For me, the Fed's view can be summed up in the response Powell gave to a question about the need for additional fiscal and monetary support. The political message to Congress came through loud and clear as Powell said those people would struggle to pay their bills or even remain in their homes. I can't recall a Fed chair even remotely as forthcoming in telling Congress to quit squabbling, as the need for fiscal stimulus is paramount to complement the Fed's do whatever it takes mantra, mainly to avoid a double-dip recession. Indeed, it's the artful dodger no more. But make no mistake, this is a Fed in control that knows there's a limit to what the FOMC can do for the economy. It can influence the markets and adjust the wealth distribution of investors and ease the burden on borrowers, but they cannot directly impact incomes for the majority of folks. The current situation is all about money in consumer pockets, which is precisely why fiscal policy is so much more important. But, at the same time, the Fed maintained the line in its formal statement that asset purchases will continue at least the current pace. While that's no change from June's language, it underlines that if the Fed were to make a change, it would be to increase the extent of accommodation rather than dial it down. In other words, they'll do what it takes to make sure the bears won't snatch defeat from the jaws of victory. The Fed is not offering forward guidance in the conventional sense. However, it's undoubtedly nodding very emphatically to its fear of the gloom still to come while holding back on his big bazooka when they roll out a new monetary framework. But by no means is this an open invitation to strap on risk in an unbridled fashion, as Chair Powell knows the August nasties are coming. However, I do look at these proceedings through a more bullish lens. The recent surge in virus cases and the reimposition of some lockdown control measures will moderately slow the economic recovery in the near term. Assuming virus developments don't prompt the reimposition of widespread control measures, we should expect the global economy will continue to rebound while the US recover to get back on track in March. So the FOMC July inactions can be very well lined up to the idea that the Feds don't want to increase the sugar drip right now, as their guidance is holding the markets in balance while preferring to wait until September to top up the punch bowl when consumers are hopefully more mobile, instead of turning up the drip when folks are taking refuge in the safety of their apartments. Forex markets. Wednesday Fed meeting lived up to its expectations as a critical curtain warmer ahead of the FOMC's big guns getting rolled out in September when the new monetary framework gets released. With the leading market risk event now in the rear-view window and the Fed keeping the door ajar to further dollar weakness, traders were initially content to go along their merry way to sell the dollar. But with the eurist struggling to break 1.1800 and gold failing to set new highs, the road to currency and gold market nirvana could be a little bumpier, as it will probably come down to data divergence, rather than a policy transmission shift, that will push the eurist to January 2000 and gold above $2,000. Generally after a post, the FOMC move trader will take note and study the data and formulate options on recent price actions across several markets. Most of these readings this morning are a bit dovish and crowded, but all closely correlated. The worry into month-end rebalancing is if one gives, all of them are liable to buckle. The month-end is tomorrow, so it could be reasonable to assume the USD could rally into the month-end. The EU equity market has outperformed US colleagues and gold to slide as bullion has outperformed the S&P 500 this month. Keep in mind this is an imperfect science and all loosely based on risk parity propensities. After month-end, and with zero hawks on the board, the markets will probably lean towards the well-held adage that when the Fed is in an easing cycle, market reaction to Fed meetings tends to be on the dovish side, even when the market goes in with dovish expectations. But it does take two to tango. Euro CNH and the Chinese yuan strengthened in the New York hours as the Fed's dovish nod lent support Asian currencies. Similarly, the ringgit is veering for a weekly 4.24 post-FOMC target, primarily encouraged by the broad-based dollar weakness and continuing evidence of oil price stability. Today, local FX traders will be looking to trade the won as South Korean data in the form of department store sales will give investors better insight into consumer activities in June. Gold markets. Reuters reported that Chinese regulators are trying to temper China gold fever. As we alluded to during the recent ramp to $2,000 futures, it was all in the price action and easily visible as recent SFE opening salvos on Monday, Tuesday, and last Wednesday showed China's retail army of traders caught a case of gold fever, spurred on by the deepening rift between the United States and China. Still, this is unlikely to have any real shift in the longer-term prospects for gold. And to borrow a horse racing betting analogy, when you have the perfect trifecta of the Fed policy geared towards depressing real 10-year yields, the US dollar status a reserve currency in question, and the CV19 headline reels continuing to spin, it doesn't get much better than that for the longer-term gold prospects. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. OKX lists synthetics. SNX USDT consolidates in a triangle formation. http ntvforex.com news ID 0FFDD5. 7 minutes ago. OKX Derivatives Exchange has recently listed SNX, the native token of synthetics. SNX token deposits and spot trading against BTC and USDT have recently gone live on the exchange. Synthetics is one of the largest DeFi apps on Ethereum in terms of locked positions and is valued at around $456 million. OKX Derivatives Exchange has recently listed SNX, the native token of synthetics, a derivatives liquidity protocol for issuance and trading of synthetic assets. SNX token deposits and spot trading against BTC and USDT have recently gone live on the exchange. Synthetics lets users trade multiple real-world financial instruments, including cryptocurrencies and stocks, over the blockchain as synthetic assets using ERC-20 tokens. The tokens linked with each synthetic asset track the price of the external assets to make such transactions possible. By adding support for SNX, OKX said that it is fulfilling its long-standing vision of being a prime mover in the DeFi sector. Synthetics is one of the largest DeFi applications on Ethereum in terms of locked positions, and its value is calculated to be around $456 million. OKX CEO Jay Howe said. OKX believes that DeFi holds some of the most potential in the cryptocurrency space. We are glad to see so many high-quality DeFi applications like Synthetics standing out in 2020 and have long been paying attention to and promoting the development of DeFi. We're also expanding our own footprint in this area with products like our C2C loan that generates passive income for our users and the development of OKChain that will be used to support a thriving DeFi infrastructure. Howe added that while listing a new token, the project's utility, user expectations, project's compliance and other conventional aspects are considered. He said that SNX has qualified all these requirements and that OKX is happy to support projects like it. SNX USDT Daily Chart. SNX USDT bulls started the day strong, by taking the price up from 3.262 to 3.33. The price chart shows strong resistance at 3.374 and 3.545. On the downside, SNX USDT has healthy support at 3.262 and 2.862. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Personal income, spending, and prices June preview. After all the agony, just an average quarter analysis. http://ntvforex.com News ID 10C73D 7/30/2022 54:28 am. Personal income expected to slip in June, personal spending to rise. Spending in the second quarter to be just below the 2019 average, retail sales were double those of last year. Income declined in June as people returned to work, mirroring average hourly earnings. Market impact will limited after Thursday's Q2 GDP data. The last major consumption figure for the second quarter is slated to show a substantial gain in June, with spending for the period just slightly below the average for last year. Personal spending is forecast to increase 5.5% following May's 8.2% gain. This measure of consumption fell 12.6% in April and 6.9% in March. Personal spending. NTV Forex. Personal income is projected to drop 0.5% last month following a 4.2% decline in May and a 10.8% rise in April. The Personal Consumption Expenditure Price Index PCE is expected to be flat on the month in June and 0.5% higher on the year. The core monthly index will be 0.2% higher, with the annual figure at 1.0%. Personal spending and retail sales. This category of consumption, properly personal consumption expenditures PCE, is a broader grouping than retail sales that includes services and is tracked from the household purchase side rather than the vendor. If the June prediction is accurate, personal spending would have averaged a 0.37% increase per month in the second quarter, with the April drop of 12.6% more than replaced by the May and June gains 8.2% and 5.5%. Surprisingly, that is hardly different than the 0.39% monthly average in 2019. The pattern is similar to the retail sales control group, which averaged a 1.1% monthly gain in the second quarter, June 5.6%, May 10.1%, April 12.4%, more than double the 2019 monthly average of 0.5%. Retail sales control group. NTV Forex. Personal income. The personal income data has been skewed by the departure and then partial return of lower paid workers in the pandemic layoffs. As hourly workers were laid off in April in large numbers, income appeared to rise 10.8% as it recorded the change to a better compensated pool of employees. The reverse happened in May as the return of lower paid furloughed workers decreased the overall average. These figures from the Bureau of Economic Analysis, a division of the Commerce Department, like the personal spending data above, track a wider set of criteria than the average hourly earnings numbers from the Bureau of Labor Statistics, by including pensions, unemployment benefits, interest, dividends and all manner of transfer payments. Average hourly earnings exhibited the same alteration and for the same reason. Earnings rose 4.7% in April as lower paid workers left and fell 1.0% in May and 1.2% in June as they were rehired. PCE Price Index. Prices have registered the profound decline in demand in March and April as the economic closures took hold in March and April. Overall prices fell 0.2% in March and 0.5% in April, then rose 0.1% in May and are expected to be flat in June. Annual numbers were the same, falling from 1.8% in February to 1.3% in March, 0.6% in April and 0.5% in May, where they are predicted to remain. The core PCE price index, the well-known bridesmaid of Fed inflation policy, dropped 0.1% in March, 0.4% in April and rose 0.1% in May. Annual numbers were 1.7% in March, and 1% in April and May. Core PCE Price Index. NTV Forex. The primary cause of the temporary deflation was price discounting by retailers as they attempted to move merchandise and goods whose sales were frozen by the instantaneous collapse of purchasing in the lockdowns. The Fed's current focus is economic support and employment, and these inflation figures will not even be an afterthought in bank policy. Conclusion and markets. Consumption data for the second quarter has shown an unexpected resilience. Retail sales doubled its 2019 average, and the wider measure of personal spending may be just a fraction below last year's average. Neither would seem to foretell the extreme collapse in GDP predicted by most economic models. At about 70% of economic activity, consumer spending dominates GDP. Of the balance in the Bureau of Economic Analysis's accounting, business investment dropped precipitously in the second quarter and net exports probably did also. Government spending, to put it mildly, went through the roof. Markets have priced in an extreme drop in American GDP in the second quarter. Though these spending and income figures will be released on Friday after the GDP numbers, they may be at odds with the expected economic activity in the COVID quarter. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP CAD price analysis fades upside momentum near 11-week top. http ntvforex.com news ID 12548. 2 minutes ago. By Anil Panchal. GBP CAD eases from 1.7368, highest since May 7 amid overbought RSI. A sustained break of the key SMA confluence and 50% Fibonacci retracement keeps the bulls hopeful. 1.71215 acts as an additional downside barrier, 61.8% Fibonacci retracement offers immediate resistance. GBP CAD takes rounds to 1.7335 amid the early Thursday morning in Asia. The quote recently surged to a multi-day high following its successful break of 50% Fibonacci retracement of March month's fall. However, overbought RSI conditions offer breathing space to the bulls, which in turn can lure sellers seeking entries. In doing so, the resistance turns support of 1.7300, comprising 50% Fibonacci retracement, will be important as a break of which can trigger fresh selling towards the confluence of 100-day and 200-day SMAs near 1.71650. Though, the pair's further downside will be restricted by a descending trend line from the early March and 38.2% Fibonacci retracement level near 1.712015, a break of which will attack the 1.7000 threshold. Meanwhile, 61.8% Fibonacci retracement level of 1.7490 and 1.7500 round figures are on the buyer's watch list during the additional north run. Given the quote's successful rise past 1.7500, the April month's high around 1.7700 will be in the spotlight. GBP CAD daily chart. Trend pullback expected. Additional important levels. Overview. Today last price 1.7339. Today daily change 37 pips. Today daily change percent 0.21%. Today daily open 1.7302. Trends. Daily SMA 20 1.7073. Daily SMA 50 1.7016. Daily SMA 100 1.7163. Daily SMA 200 1.7159. Levels. Previous daily high 1.7346. Previous daily low 1.7175. Previous weekly high 1.7181. Previous weekly low 1.6977. Previous monthly high 1.7178. Previous monthly low 1.6751. Daily Fibonacci 38.2%. 1.7281. Daily Fibonacci 61.8%. 1.724. Daily Pivot Point S1. 1.7202. Daily Pivot Point S2. 1.7103. Daily Pivot Point S3. 1.7031. Daily Pivot Point R1. 1.7374. Daily Pivot Point R2. 1.7446. Daily Pivot Point R3. 1.7546. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Euro USD forecast bullish levels to watch after devastating US data downs the dollar analysis. http ntvforex.com news ID 136076. 7/30/2021 47:29 p.m. Euro USD has advanced after weak US GDP and jobless claims. The Fed's gloomy stance and Europe's coronavirus advantage may extend the pair's gains. Thursday's 4-hour chart is showing that bulls have room to run. Better than expected but still the worst in history. The US economy fell by 32.9% annualized in the second quarter, better than 34.1% estimated but well within the wide range of expectations. In quarterly terms, the world's largest economy squeezed by 9.5%, and that is better than Germany's contraction of 10.1% recorded early in the day. Nevertheless, Euro USD is rising. Investors seem to look beyond the second quarter, which ended a month ago, and focus on recent data. Europe is suffering several COVID-19 flare-ups but is returning to growth. That cannot be said about the US, where weekly jobless claims increased once again. Initial applications rose to 1.434 million and continuing claims are up above 17 million in the week when non-farm payrolls surveys are held. Even if America gains jobs in July, the prospects are dim as the death toll from the disease is rising. For the full explanation, US GDP quick analysis could have been worse, but will not improve, winners and losers in markets. Euro USD has already topped the post-Fed high of 1.1806 and may be ready to extend its gains. New coronavirus figures from the US may weigh heavily on the dollar later in the day. Euro USD technical analysis. Despite the recent rally, the relative strength index on the 4-hour chart remains below the 70 level outside overbought conditions and allowing the currency pair to continue rising. The next level to watch is 1.1820, a high point in September 2018. Beyond that point, euro-dollar would hit the highest since June 2018, a 2-year peak. The next hurdles are 1.1850 and then only the psychologically significant 1.20, but that would trigger overbought conditions if it happens too fast. Momentum remains to the upside and Euro USD holds above the 50, 100, and 200 simple moving averages. Support awaits at 1.1780, 1.1750, and 1.17. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold spot intraday support around 1951.00 analysis.http://ntvforex.com news ID 1403C5 7/30/2027 29:46 am. Gold spot intraday support around 1951.00. Stay on top of the markets with Swiss Quote S News AMP analysis. Pivot invalidation 1951.00. Our preference long positions above 1951.00 with targets at 1981.00 amp 1993.00 in extension. Alternative scenario below 1951.00 look for further downside with 1941.00 amp 1931.00 as targets. Comment: the RSI is mixed with a bullish bias. Silver spot intraday support around 23.9000. Pivot invalidation 23.9000. Our preference long positions above 23.9000 with targets at 24.6500 amp 24.9300 in extension. Alternative scenario below 23.9000 look for further downside with 23.5500 amp 23.2700 as targets. Comment: intraday technical indicators lack momentum. Crude oil WTI choppy. Pivot invalidation 41.50. Our preference short positions below 41.50 with targets at 41.10 amp 40.85 in extension. Alternative scenario above 41.50 look for further upside with 41.70 amp 41.90 as targets. Comment: as long as 41.50 is resistance, look for choppy price action with a bearish bias. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Euro USD tests 1.18 after US GDP analysis. http://ntvforex.com news ID 145A0E 7/30/2022 10:57 p.m. The Eurist pair was bid on Thursday as investors sold the greenback amid deteriorating US data and Trump's tweets. The euro erased daily losses and shot higher to test the 1.18 level again. Traders paid attention to the US Q2 GDP, which came out at 32.9% annualized. Wow! At 32.9%, the second quarter annualized contraction marked by far the worst plunge ever recorded, based on Bureau of Economic Analysis data spanning back to 1947. Before the pandemic, the worst GDP print on record was in the first quarter of 1958, when GDP fell 10.0% on an annualized basis. More jitters hit the markets when President Trump fired off a Thursday tweet suggesting that the 2020 election could be postponed over concerns that mail-in ballots will lead to the most inaccurate and fraudulent election in history, adding it will be a great embarrassment to the USA. Delay the election until people can properly, securely, and safely vote. Earlier in the day, German GDP contracted by 10.1% QQ in the second quarter of 2020, the biggest drop on record, and worse than the 9% expected decline. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP JPY set for a bullish breakout video analysis. http://ntvforex.com news ID 1463B1 7/30/2028 57:15 am. GBP/JPY is set for a bullish breakout after finding significant support near the lower line of a symmetrical triangle and the 20-day simple moving average SMA. The pair also managed to step on the surface of the Ichimoku cloud and return slightly above the 50% Fibonacci of the 147.94-124.00 downleg, increasing optimism that the bulls may not give up yet. A similar view is reflected among the momentum indicators too. The RSI is making higher highs and higher lows in the bullish area and has still some room for improvement before jumping into the overbought zone. The stochastics, below their 80 overbought mark, are changing direction north again, while the MACD seems to be regaining strength above its red signal line. Hence, the short-term risk is tilted to the upside and it remains to be seen whether the descending trend line, which is currently touching the 200-day SMA around 137.40, shows sympathy to the bulls. In such a case, the price could head for the 61.8% Fibonacci of 138.80. Breaching that barrier, the rally may take a breather near the 140.85 former support area before accelerating towards the 143.30 restrictive region. Higher, February's peak of 144.94 may next appear on the radar. In the negative scenario, where the pair dips below the triangle and the 20 and 50-day SMAs, the 38.2% Fibonacci of 133.15 could immediately provide base. If not, sellers would target the previous low of 131.74, a break of which would scrap the upward pattern and push the price towards the 23.6% Fibonacci of 129.65. Beneath the latter, traders could look for support around 128.00. Summarizing, GBP/JPY aims for additional gains in the short term. However, any potential upside correction could prove to be more sustainable above the triangle. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Pattern CHF CAD, CHF JPY analysis. http://ntvforex.com news ID 14816F. 7/30/2029 49:02 AM. CHF CAD 4H decline likely to continue. The Swiss franc has declined by 2.48% against the Canadian dollar since the middle of July. The currency pair was pressured the lower by the 200-period simple moving average. Technical indicators suggest selling signals on all time frames charts. Most likely, the CHF CAD exchange rate could continue to edge lower during the following trading sessions. However, a potential upside reversal could occur from the weekly support level at 0.6818 in the shorter term. CHF JPY 4H bullish momentum to continue. The Swiss franc has surged by 250 pips or 2.21% against the Japanese yen since July 16. The currency pair tested the upper boundary of an ascending channel pattern at 115.51 on July 23. All things being equal, the exchange rate could continue to edge higher during the following trading sessions. A breakout through the upper line of the ascending channel pattern could occur. Furthermore, technical indicators demonstrate buying signals on all time frame charts. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP/NZD. The GBP/NZD looks ready to recuperate analysis. http://ntvforex.com news ID 15395E. 7/30/2021 52:36 p.m. The pair recently established a significant spike up, which signals a monumental change in the underlying sentiment. After concluding a significant bearish trend, which was initiated in the wake of the initial market crash in late March, the price action looks ready to revert its course, and start climbing back up. Even though the underlying bullish bias is rapidly rising, this does not mean that the bulls could place their buying orders just anywhere. Instead, they might prefer to sit and wait for a new bearish correction to be established before they join the market. The GBP/NZD has been going up for 6 consecutive days, which means that with each subsequent day of gains, the likelihood for the emergence of a minor retracement is increased. That is why such potential retracements encapsulate the underlying risk from buying in at the current market price in the near term. Therefore, the purpose of today's analysis is to examine the crucial price levels associated with the presently emerging bullish trend and to sketch its most likely future progression. Long-term outlook. As can be seen on the daily chart below, the aforementioned bearish trend is represented by the downward sloping channel, the markdown. Once the underlying price action managed to break out above its boundaries, this signaled the termination of the downtrend and the beginning of something new. The first considerably important price level that needs to be examined is the major resistance presently serving as support at 1.94800. It was the starting point of the last bullish trend, which is what makes it so relevant for the development of a new such uptrend. The breakout above this level comprises the second substantial confirmation of the rising bullish sentiment. As regards the importance of the 1.94800 price level, there is one more thing that can be said of its relevance. It also takes the role of the 23.6% Fibonacci retracement level, which makes it a likely turning point of particular interest. This is worth stressing because once the underlying price action breaks out above below such levels, usually such steps are subsequently followed by retracements back to the support resistance. In other words, the bulls can use this assertion to wait for a drop down towards the 1.94800 level, which would constitute a test for the new role of this level, that of a support. Accordingly, the bulls could go long around this level on the anticipation for continued price appreciation afterwards. The bullish belt hold line and the hammer candlestick represent the bottom of the preceding bearish trend and the starting point of the new bullish trend, which is expected to emerge from the temporary accumulation range. In addition to breaking out above the downward sloping channel's upper boundary and the major resistance at 1.94800, the price action is also trading above the 3 MOS as indicated on the chart. All of this demonstrates the strength of the rising bullish sentiment. Notably, the price action is trading above the 50-day MA in blue for the first time since the beginning of the preceding bearish trend. Meanwhile, the 10-day MA in red recently crossed above the 30-day MA in green, which comprises yet another indication of the rapidly rising bullish sentiment. The first target level for this newly evolving uptrend is encompassed by the 38.2% Fibonacci retracement level at 1.97853. Meanwhile, its longer-term goal is encapsulated by the 61.8% Fibonacci retracement level at 2.02659. Short-term outlook. The structure of the recent upswing is further delineated on the 4H chart below. Firstly, the parabolic SAR indicator illustrates the solid bullish momentum in the short term. A swing high is yet to be established, which would be manifested as a pivot point. Only afterwards a new bearish correction could take place, which would subsequently set a new swing low. This would encompass a favorable entry level for the bulls. As can be seen, the stochastic RSI indicator has been threading within the overbought extreme pretty much since the beginning of the latest upswing. This cannot be sustained indefinitely, which means that eventually, the underlying buying pressure would have to take a break, allowing for such a correction to take place. Finally, in anticipation of a new bearish correction, traders need to monitor the shape and size of the Bollinger Bands in addition to the direction of the underlying momentum, as represented by the MACD indicator. In other words, once the Bollinger Bands, which are quite wide at present, start contracting once again, this would be demonstrative of waning bullish pressures. Meanwhile, if the two EMAs comprising the MACD start generating consecutively lower peaks, this would be manifesting a diminishing bullish momentum. Concluding remarks. The GBP/NZD pair has recently concluded establishing the first major step in the development of a new bullish trend. That was the breakout above the pivotal resistance level at 1.94800. All underlying pieces of evidence point towards the same likely conclusion: the pair is ready to develop a new bullish trend. This would naturally take days and even weeks to unfold, as the price action creates multiple swing lows and swing highs. That is why the bulls need not rush to join this new bullish trend at all costs, but rather wait for the conclusion of the first bearish correction in order to enter at a discount. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Halfway through the year, how is China doing on its trade commitments analysis? http://ntvforex.com News ID 16BE67 7/30/2020 1:52:15 AM. China has missed the mark across the board. China imports and exports by product type. Charts courtesy of the PIIE US China Phase 1 Tracker. China's purchases of US goods. Totals. Agricultural imports $8.7 billion out of $36.6 billion 23.8%. Manufactured goods $30.3 billion out of $110.8 billion 27.3%. Energy $1.3 billion out of $25.3 billion 6.2%. Uncovered $16.2 billion out of $45.6 billion 35.5%. Those numbers should all be in the 50% range. None are close. Energy is not even out the door. Soybeans are likely a bit better than it seems because the harvest is coming up and China may catch up a bit. Collectively, China's purchases of all covered products were only at 47% US exports or 47% Chinese imports of their year-to-date targets. Energy is the biggest drag, but China is not close anywhere. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Pound sterling price news and forecast. GBP USD climbs to fresh multi-month highs above 1.3050. http://ntvforex.com News ID 18DDB8. 5 minutes ago. By NTV Forex Team. GBP USD outlook: bulls look for renewed attack at 1.3017 Fibo barrier after consolidation. After spending the first half of the day below 1.3000, the GBP USD gained traction amid broad-based USD weakness and rose to its highest level since early March at 1.3062. As of writing, the pair is up 0.45% on the day at 1.3053 and is looking to close the fifth straight day in the positive territory. Read more. GBP USD climbs to fresh multi-month highs above 1.3050 on broad USD weakness. After spending the first half of the day below 1.3000, the GBP USD gained traction amid broad-based USD weakness and rose to its highest level since early March at 1.3062. As of writing, the pair is up 0.45% on the day at 1.3053 and is looking to close the fifth straight day in the positive territory. The data published by the U.S. Bureau of Economic Analysis revealed on Thursday that the U.S. real GDP shrunk by a record 32.9% on a yearly basis in the second quarter. Although this reading came in slightly better than the market expectation for a contraction of 34.1%, it caused the U.S. Treasury bond yields to fall and weighed on the greenback. Read more. GBP USD analysis pierced weekly R2. Yesterday, the GBP USD exchange rate tested the resistance level formed by the weekly R2 at 1.2992. During Thursday morning, the rate pierced the given resistance. Given that the currency pair is supported by the 55-hour moving average near 1.2945, it is likely that some upside potential could prevail in the market. In this case, the pair would have to exceed the monthly R2 at 1.3051. Meanwhile, if the predetermined resistance holds, it is likely that the British pound could consolidate against the US dollar in the short term. Read more. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. King dollar falls from grace, growth concerns to blame. Video analysis. http://ntvforex.com news ID 196C63. 7/30/2022 03:44 p.m. The world's reserve currency took a beating lately, as the resurgence of infections in the US painted a darker outlook for the nation's economic recovery and sparked expectations for more action by the Fed. But FX is a two-way game, and the dollar's downfall wouldn't have been so sharp without better news out of Europe bolstering the euro. Is this just the beginning of a larger rally in euro-dollar that is predicated on Europe outperforming the US? It seems so, though calls that the dollar is losing its reserve currency status appear groundless. American pain. It's a rare phenomenon, but there's a growing sense among investors that Europe will recover faster than the US, thanks to a better management of the health crisis. America is still struggling to contain infections in several states, and that is threatening to put the brakes on the economy's comeback. Indeed, as the chairman of the Fed highlighted on Wednesday, real-time data suggest the recovery is already losing steam. In the financial markets, this has translated into a weaker dollar, as the worsening outlook has fueled expectations for a more aggressive Fed. In turn, that's pushing down on US bond yields, eroding what little interest rate advantage the greenback had left. At the same time, the dollar may be feeling the heat of record-breaking US deficits. So far this year, the government's deficit is reported at $2.7 trillion, and Congress is working on a new rescue package that will cost at least another $1 trillion. In reality, it will probably be much more, as the Democrats are pushing for $3 trillion. If we assume it comes down to $1.5 trillion, the deficit will exceed 20% of GDP this year, and that's without anything else before year-end. The final leg of this bearish dollar story is safe haven demand for the reserve currency, which has mostly evaporated. Financial markets have calmed down, stocks are back near record highs, and volatility is declining, all of which is pushing investors away from the greenback's safety. European gain. But fears around the US aren't enough for the dollar to drop so significantly. After all, FX is a zero-sum game in the sense that for a currency to lose, some other must win. The winner this time was the euro. Not only did Europe take a more proactive approach to the lockdowns and was more vigorous with contact tracing, but the government stimulus, even though smaller in absolute size, was more targeted to supporting wages and jobs, limiting the damage to the labor market. More importantly, EU leaders used the crisis to push for greater transfers between economies. After lengthy negotiations, the EU approved a large recovery fund that will distribute loans and grants to assist the most devastated economies. Grants don't have to be paid back, thus helping nations with already high debt levels like Italy. This is a game changer. This was the Eurozone's Achilles heel, the lack of a federal government like in the US that can assist individual states when they are in trouble. Even though this step is still miles away from a proper fiscal union, it still sets a significant precedent that might ultimately give rise to a real risk-sharing instrument, like Eurobonds. Indeed, consensus forecasts suggest the euro area will shrink by 8% this year, worse than the 5.6% contraction seen for the US due to the stricter lockdowns. But for 2021, expectations are for a 5.5% rebound in Europe, faster than the 4% in the US. That said, these numbers are a little outdated and probably don't reflect the latest spike in US infections, so the real situation today likely favors Europe even more. A new era. The question now is whether this is the beginning of a new uptrend in euro-dollar, or whether this narrative is mostly priced in already. Admittedly, most factors suggest it can continue. For one, it's becoming clear that the Fed will take more decisive action in September, possibly by committing to not raise rates again until inflation exceeds its 2% target. Meanwhile, asset managers worldwide spent the last decade piling into and being overweight U.S. assets. They now have a reason to diversify, and the obvious choice is Europe. Then there's an imminent U.S. election to consider. Donald Trump is behind in the polls, lagging Joe Biden by 9 percentage points nationwide. He's also losing in every battleground state. Biden wants to reverse some of Trump's tax cuts and raise the corporate tax rate again. Is that risk priced into equities and the dollar? Finally, nobody is talking about this, but the scenario that credit rating agencies downgrade U.S. bonds is becoming a real possibility, given the historic surge in debt. But reserve currency isn't losing its status. Now, to be clear, all this doesn't mean that some collapse in the dollar is coming. Yes, the greenback might lose some more ground, but concerns that it is losing its reserve currency status seem baseless. Most global transactions are still settled in dollars, U.S. capital markets are far larger and more mature than anywhere else, and there's really no other alternative. The yuan can't be a reserve currency while China has a closed capital account, which is essentially a form of capital controls, and the euro has no fiscal union behind it. The price action in March speaks for itself. When the world economy falls off a cliff, all investors want is the dollar. So what could breathe life back into the reserve currency? The obvious fix would be the US virus situation coming under control, allowing for a faster recovery and shattering the whole euro outperformance narrative. The opposite may work too. If Europe is hit by a second wave, for example, and volatility returns, the dollar could become the market's darling again, both as a haven play and as economic expectations for Europe are marked down. Another saving grace might be the European Central Bank. If the euro keeps this momentum up, the ECB may become uncomfortable with a stronger currency, as that pushes down on inflation. Hence, the ECB may express discomfort with the exchange rate, or find some other way to clip its wings. The trend is your friend. All told, in this post-pandemic era, economic narratives can change in a flash. At this stage, it seems like Europe is set for a faster and smoother recovery, but that can change quickly if more infection waves hit the continent. Plus, the US might catch up at some point. The point is that in such a fluid environment, where sentiment can turn quickly, technical indicators can sometimes give a clearer picture of where markets are headed. Specifically, for all its recent gains, euro-dollar is still trying to overcome a long-term downtrend line drawn from the 2008 peak. For the euro to really extend this rally, it needs a weekly close above this crucial line. Until that happens, some extra caution is warranted. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Europe points to a mixed start ahead of US GDP analysis. http://ntvforex.com News ID 1/19 FB 7/30/2026 24:59 AM. Whilst knowledge that the Fed has its back boosted market sentiment on Wednesday evening, investors are starting to get jittery as they look ahead to US GDP. Europe is pointing to a mixed start with German GDP and unemployment under the spotlight. Fed has your back. As expected, the Fed kept interest rates unchanged at near 0%. Federal Reserve Chairman Jerome Powell provided the markets with a healthy dose of reality, highlighting that the COVID-19 pandemic was far from over and that the U.S. economy was facing mounting challenges. Uncertainty remains high and the path forward depends on the virus. The Fed promised to use its full range of tools if needed, showing it remains prepared to do whatever it takes. The Fed's large presence in the market boosted sentiment, with Wall Street closing in positive territory. His comments come as the number of coronavirus cases in the U.S. continues to rise at an alarming rate. Deaths in the three largest states, California, Florida, and Texas, hit record highs. U.S. GDP expected to be ugly. The mood in the market has turned jittery as investors look ahead to U.S. GDP data. The U.S. economy is forecast to contract 34.1% in Q2 YoY after a 5% annualized contraction in Q1. This would be the largest decline on record as the lockdown in April and part of May sent consumer spending plunging and saw business investment dry up. The unprecedented nature of the coronavirus crisis leaves plenty of room for surprises. Q2 is expected to be as bad as it gets. However, concerns are growing over the recovery as COVID numbers show little sign of slowing. Recovery in U.S. labor market still stalling. U.S. jobless claims will also provide further insight as to how the recovery in the U.S. labor market is progressing. Last week jobless claims pointed to the recovery in the labor market stalling. Whilst 1 week by no means constitutes a new trend, 2 weeks of a stalling recovery could be more unnerving and drag sentiment lower. FAANGs to report. Later today the remainder of the FAANGs report. They do so after a phenomenal run-up from mid-March lows. However, since reaching recent all-time highs the rally in the FAANGs has run out of steam. Expectations are high, leaving plenty of room for disappointment. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US dollar index price analysis rebound could target 94.20. http ntvforex.com news ID 1A4E4C. 1 minutes ago. By Pablo Piovano. DXY manages to regain some traction following 2-year lows. The Fibo level at 94.20 emerges as the next hurdle. The bearish bias in the dollar remains well and sound despite the ongoing rebound in DXY from levels last seen in May 2018 in the 93.2015 band. The bounce is seen as corrective only and follows the oversold conditions of the index. If the bounce gains serious traction, then it should meet resistance at 94.20, where sits a Fibo level of the 2017-2018 drop. Looking at the broader scenario, however, further downside is increasingly likely, facing the next stop at 92.24 low May 14, 2018. The negative outlook on the dollar is expected to remain unaltered while below the 200-day SMA, today at 98.05. DXY Daily Chart. Dollar Index Spot. Overview. Today last price. 93.5. Today daily change. 37. Today daily change percent. 0.25. Today daily open. 93.27. Trends. Daily SMA 20. 95.75. Daily SMA 50. 96.84. Daily SMA 100. 98.38. Daily SMA 200. 98.08. Levels. Previous daily high. 93.8. Previous daily low. 93.18. Previous weekly high. 96.18. Previous weekly low. 94.32. Previous monthly high. 98.24. Previous monthly low. 95.72. Daily Fibonacci 38.2%. 93.41. Daily Fibonacci 61.8%. 93.56. Daily Pivot Point S1. 93.03. Daily Pivot Point S2. 92.79. Daily Pivot Point S3. 92.41. Daily Pivot Point R1. 93.66. Daily Pivot Point R2. 94.04. Daily Pivot Point R3. 94.28. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, Text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CAD jumps to weekly highs above 1.3450 on oil sell-off. http ntvforex.com news ID 1E4-5. 59 minutes ago. By Aaron Sengezer. USD CAD gained traction and rose to fresh weekly high on Thursday. Concerns over energy demand outlook weigh heavily on crude oil prices. US dollar index erases daily gains in American session. The USD CAD pair rose sharply in the last hour and touched its highest level in a week at 1.3458 as plunging crude oil prices weighed on the commodity-sensitive loonie. As of writing, the pair was up 0.82% on the day at 1.3450. WTI slumps below $40. The data from the U.S. on Thursday showed that the economic activity, as measured by the real gross domestic product (GDP), contracted by 32.9% on a yearly basis in the second quarter. This reading seems to have revived concerns over a lackluster recovery in the energy demand and triggered a heavy sell-off in crude oil. At the moment, the barrel of West Texas Intermediate, which touched its lowest level since early July at $38.70, is down nearly 5% on the day at $39.25. On the other hand, the greenback lost its strength against its rivals after the GDP report caused the U.S. Treasury bond yields to push lower. With the US dollar index pulling away from daily highs and turning flat on the day near 93.30 amid a 5.7% drop in the 10-year UST bond yield, USD CAD's upside remains capped for the time being. Nevertheless, unless the WTI stages a rebound, the pair could try to push higher toward 1.3500. On Friday, Statistics Canada will release its monthly GDP data. Analysts expect to see a 3.5% expansion in the Canadian economy in May following April's decline of 11.6%. Technical levels to watch for. USD CAD. Overview. Today last price. 1.3449. Today daily change. 0.0107. Today daily change percent. 0.80. Today daily open. 1.3342. Trends. Daily SMA 20. 1.3507. Daily SMA 50. 1.3577. Daily SMA 100. 1.3831. Daily SMA 200. 1.3521. Levels. Previous daily high. 1.3387. Previous daily low. 1.3333. Previous weekly high. 1.36. Previous weekly low. 1.3352. Previous monthly high. 1.3802. Previous monthly low. 1.3316. Daily Fibonacci 38.2%. 1.3354. Daily Fibonacci 61.8%. 1.3366. Daily Pivot Point S1. 1.3321. Daily Pivot Point S2. 1.33. Daily Pivot Point S3. 1.3266. Daily Pivot Point R1. 1.3375. Daily Pivot Point R2. 1.3409. Daily Pivot Point R3. 1.343. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price news and forecast. XAU-USD break to new all-time high in gold confirms bullish market. http ntvforex.com news ID 20AF90. 9 minutes ago. By NTV Forex team. Gold price analysis well supported as Trump floats delaying the election's confluence detector. Gold has been consolidating its gains achieved earlier in the week and failed in its second attempt to surge above the $1,981 level after the Federal Reserve's rate decision. The Fed painted a gloomier picture of the economy and opened the door to more stimulus. The central bank's worries were echoed with weak gross domestic product and a rise in jobless claims. President Donald Trump tweeted that perhaps the elections should be postponed given the virus. While his comments seemed to divert attention from the economic figures, it triggers new worries. Read more. Break to new all-time high in gold confirms bullish market. Gold has finally broken to a new record high this week, confirming the secular bull market has resumed. We know it's a matter of time as it has made a new all-time high to almost all other major world currency. In our public seminar in September 2019, we mentioned that ZAUSD should follow the path of gold vs other major currencies. Read more. Gold remains depressed near session lows, around $1,950 post-US GDP. Gold maintained its offered tone near daily lows, around the $1,950 region, and had a rather muted reaction to the US GDP report. The precious metal witnessed some selling on Thursday and moved away from the previous day's all-time high, around the $1,981 area retested in the aftermath of a dovish FOMC statement. A modest US dollar rebound from more than two-year lows was seen as one of the key factors that prompted some profit-taking around the dollar-denominated commodity. Read more. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Intraday news and views and data to be released today. Euro USD analysis. http ntvforex.com news ID 233CD5. 7/30/2026 26:08 a.m. Intraday market moving news and views. Update time July 30, 2020 0530 GMT. Euro 1.1775 US dollars. The single currency went through a roller coaster ride on Wednesday. The pair remained on the front foot in Asia and gained to 1.1769 in early European morning before briefly dropping to 1.1719 at New York Open. The pair then rallied to a fresh 22-month peak at 1.1806 in post-FOMC trading and then retreated to 1.1755 in New York afternoon on profit-taking before rebounding again to 1.1797. However, failure to penetrate said top triggered renewed selling in Asia today and price weakened to 1.1767. Euro's rise to a fresh 22-month peak at 1.1806 yesterday suggests MT uptrend would head to 1.183040 after consolidation. Bids are now seen at 1.176070 with stops building up below there whilst initial offers are noted at 1.184050. There is a slew of data coming out of the Eurozone today including German unemployment, EU economic and business sentiment, but one should pay particular attention to Germany's GDP QQ and YY at 0800 GMT. Street forecasts are 9.0% and 11.3% vs previous readings of 2.2% and 2.3% respectively. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin cash price analysis. BCH USD struggles to stop the sell-off, regains ground from intraday low. http ntvforex.com news ID 245984. 0622 GMT. Bitcoin Cash BCH has retreated from the recovery high. The sell-off has stalled, but the coin is still vulnerable for losses. Bitcoin Cash BCH extended the decline on Thursday and lost over 2% both on a day-to-day basis and since the beginning of the day. BCH/USD hit the recent recovery high on approach to $300 and retreated to $281.50. However, the downside momentum stalled. At the time of writing, BCH/USD is changing hands at $284. The coin takes fifth place in the global cryptocurrency market rating with the current market value of $5.24 billion. An average daily trading volume is 1.8 billion. BCH/USD technical picture. On the intraday charts, BCH/USD has settled below 50-hour SMA at $286. This development worsened the short-term technical picture and pushed the rise to the lower line of the 1-hour Bollinger Band at $281.30. This downward-looking technical line limited the decline for the time being. The next support is created by 100-hour SMA at $271. Once it is out of the way, the sell-off is likely to gain traction with the next focus on 200-hour SMA at $254. BCH1 US dollar hour chart. On the upside, the initial resistance is created by the upper line of the daily BB at $285. It is followed by the above-mentioned 50-hour SMA and psychological $290. Once it is out of the way, the upside is likely to gain traction with the next focus on psychological $300. Considering that the RSI on the daily chart, the bearish correction looks credible at this stage. BCH/USD daily chart. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bascand technical analysis. VET USD trading inside a descending parallel channel close to a bullish breakout towards $0.022. http ntvforex.com news ID 26BA27. 21 minutes ago. VET USD has been trading inside a daily descending channel for almost 3 weeks. Bulls are on the verge of getting a breakout above $0.018, which should have enough continuation towards $0.022. Descending parallel channels are generally bullish, especially if they happen after a major rally, which is exactly what Bascand experienced. Buyers have defended the daily 26 EMA and bounced above the 12 EMA, touching the upper line of the channel. VET USD daily chart. This is where the action will happen. While VET can see a bearish or bullish breakout, the latest has more chances of happening considering the overall state of VET and the entire crypto market. The RSI has cooled off significantly, but the MACD remains bearish. VET would need to see a clear breakout above $0.018 to confirm the break of the parallel channel. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Oil price analysis. WTI has taken a dive, but crude ally holds above $40 per barrel. http ntvforex.com news ID 278cc4. 21 minutes ago. By Rajundal, MSTA. WTI is trading 2.8% lower as sentiment takes a turn for the worse on Thursday. The bears attacked $39 per barrel, but the bulls stepped in. WTI 4-hour chart. WTI has pulled away from its best levels on Thursday as sentiment turns to the downside. In the major bourses, some of the major oil names are underperforming as their updates paint a bleak picture. Interestingly, job cuts and capex reductions could lead to less supply in the market, so long-term this could be bullish for the WTI price. Looking closer at the chart below, the price failed to break the top of the pattern where the black downward sloping trend line lies. On the downside, the upward sloping trend line has now been broken, but the market found some support just ahead of the $39 per barrel level. Now this zone marked in red is very important, as a break could mean the price is heading to lower levels. The indicators are both looking very bearish now. The relative strength index has moved into oversold territory, hitting the 30 area. The MACD histogram is now firmly in the red and the signal lines are separating under the mid-level. Overall, on the higher time frames, the trend is still bullish. This could be a point where a lower high lower low pattern may start to form. A break of the aforementioned $39 per barrel level is the one to look out for if your bias is bearish. Additional levels. WTI. Overview. Today last price. 40.38. Today daily change. 1.03. Today daily change percent. 2.49. Today daily open. 41.41. Trends. Daily SMA 20. 40.88. Daily SMA 50. 38.77. Daily SMA 100. 32.04. Daily SMA 200. 43.78. Levels. Previous daily high. 41.66. Previous daily low. 41.03. Previous weekly high. 42.52. Previous weekly low. 39.99. Previous monthly high. 41.65. Previous monthly low. 34.45. Daily Fibonacci 38.2%. 41.42. Daily Fibonacci 61.8%. 41.27. Daily Pivot Point S1. 41.07. Daily Pivot Point S2. 40.74. Daily Pivot Point S3. 40.44. Daily Pivot Point R1. 41.71. Daily Pivot Point R2. 42. Daily Pivot Point R3. 42.34. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. COVID-19 outbreak picks up in Midwest as summer travel spreads virus. Reuters. http://ntvforex.com News ID 27C457. 6 minutes ago. By Ross J. Berland. Reuters reported on how coronavirus infections have appeared to be picking up in the U.S. Midwest, according to the coordinator of the White House Coronavirus Task Force on Thursday, as Ohio reported a record day of cases and Wisconsin's governor mandated the use of masks. Lead paragraphs. The coronavirus outbreak is moving up into Ohio, Kentucky, Tennessee, Missouri, Kansas, and Nebraska from the south because of vacations and other reasons of travel, Deborah Birx told Fox News. Ohio's health department said the state had its highest single-day increase in cases. The pandemic started in January, which Governor Mike DeWine told a news conference was certainly not good news. A few states away in Wisconsin, Tony Evers joined dozens of other governors who have ordered residents to wear face coverings in public. Masks are recommended by health experts, but some conservatives say such orders violate the U.S. Constitution. While I know emotions are high when it comes to wearing face coverings in public, my job as governor is to put people first and to do what's best for the people of our state, so that's what I am going to do, Evers, a Democrat, said in a statement. Key notes. The United States remains the country most affected by the COVID-19 outbreak, surpassing a death toll of 150,000 on Wednesday. Florida reported a record increase in new COVID-19 deaths for a third consecutive day on Thursday, according to the state health department, while Arizona also reported a record increase in fatalities. The two states had been hotspots with major outbreaks, but new cases have recently slowed in both, according to a Reuters tally. According to the temporary healthcare staffing platform NSFLI, demand for nurses Arizona increased 75% in July over June. Market implications. The surge and spread in novel coronavirus cases has hampered efforts to recover from an economic crisis brought on by stay-at-home orders and business closures. Millions of Americans out of work and the consumer is anxious. Subsequently, the pressured US dollar is now under extreme scrutiny. DXY dollar liquidity plentiful thanks to the Fed, markets increasingly bearish on US outlook. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US 2020 Presidential Election No Easy Cures Analysis. http://ntvforex.com News ID 2A1761. 7/30/2021 54:59 am. The 2020 presidential election will be highly influenced by the health crisis, the economic recession, polarization, and micro-targeting. Based on polling data and in-house models, the Democrats are the odds-on favorite to win the presidency and the House, and could possibly flip the Senate. Key points. The result will be determined by voter turnout and the ability of the candidates to persuade the undecided in swing states. While the common view is that political outcomes have a significant influence on economic performance, we expect economic conditions that prevailed over the past decade to remain largely the same regardless of who wins in November. For most industries, structural trends and technological change are more relevant than the results of the election. There are a number of structural challenges that need to be addressed, including sustainability, infrastructure, automation, digitization, polarization, education, healthcare, housing, inequality, racism, immigration, Ramp D, and fiscal stability. The fundamental question is which path the US will take, an inclusive and strategic vision towards exceptionalism, or one that falls victim to procrastination and polarization conducive to stagnation. Read the full article. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold remains depressed near session lows, around $1,950 post USGDP. http://ntvforex.com News ID 2A18D6. 5 minutes ago. By Haresh Menghani. A modest USD rebound from two-year lows prompted some profit-taking around gold. The US GDP collapsed 32.9% during the second quarter of 2020, albeit did little to influence. A steep fall in the US bond yields, weaker risk sentiment extended some support to the metal. Gold maintained its offered tone near daily lows, around the $1,950 region, and had a rather muted reaction to the US GDP report. The precious metal witnessed some selling on Thursday and moved away from the previous day's all-time high, around the $1,981 area, retested in the aftermath of a dovish FOMC statement. A modest US dollar rebound from more than two-year lows was seen as one of the key factors that prompted some profit-taking around the dollar-denominated commodity. Meanwhile, the USD bulls seemed rather unimpressed by Thursday's release of the advance Q2 GDP report, which showed that the US economy contracted by 32.9% annualized pace. A steep decline in the US Treasury bond yields, coupled with the impasse over the next round of the US fiscal stimulus measures, kept a lid on any strong gains for the greenback. This, in turn, extended some support to the non-yielding yellow metal. Apart from this, a sharp turnaround in the global risk sentiment as depicted by heavy losses in the equity markets further underpinned the precious metal's safe haven status and helped limit any deeper losses, at least for now. Hence, it will be prudent to wait for some strong follow-through selling before confirming that the commodity might have already topped out. Technical levels to watch. XAU/USD. Overview. Today last price. 1953.81. Today daily change. 17.64. Today daily change percent. 0.89. Today daily open. 1971.45. Trends. Daily SMA 20. 1838.3. Daily SMA 50. 1775.77. Daily SMA 100. 1717.1. Daily SMA 200. 1625. Levels. Previous daily high. 1980.89. Previous daily low. 1941.58. Previous weekly high. 1906.68. Previous weekly low. 1805.86. Previous monthly high. 1785.91. Previous monthly low. 1670.76. Daily Fibonacci 38.2%. 1965.87. Daily Fibonacci 61.8%. 1956.6. Daily Pivot Point S1. 1948.39. Daily Pivot Point S2. 1925.33. Daily Pivot Point S3. 1909.08. Daily Pivot Point R1. 1987.7. Daily Pivot Point R2. 2003.95. Daily Pivot Point R3. 2027.01. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CHF price analysis hits lowest since May 2015. http ntvforex.com news ID 2AAA2C 017 GMT by Omkar Godbol. USD CHF slips to multi-year lows below 0.9120 on broad-based dollar sell-off. Technical indicators like the RSI suggest extreme oversold conditions. The USD-CHF pair fell to 0.9116 during Thursday's Asian trading hours to hit the lowest level since May 2015. The pair has dropped by over 3.6% this month and is down over 5.6% on a year-to-date basis. With the Federal Reserve reiterating dovish bias on Wednesday, the doors remain open for a further decline in USD-CHF. However, we may see a minor corrective bounce as the 14-day relative strength index is reporting extreme oversold conditions. In addition, the 4-hour chart RSI is signaling a bullish divergence. As such, the pair may revisit the descending 50-hour simple moving average SMA, currently at 0.9170. At press time, USD-CHF is trading at 0.9124. Daily chart. Trend bearish but oversold. Technical levels. USD-CHF. Overview. Today last price. 0.913. Today daily change. 0.0004. Today daily change percent. 0.04. Today daily open. 0.9126. Trends. Daily SMA 20. 0.9351. Daily SMA 50. 0.9472. Daily SMA 100. 0.9581. Daily SMA 200. 0.9681. Levels. Previous daily high. 0.9188. Previous daily low. 0.9117. Previous weekly high. 0.941. Previous weekly low. 0.9204. Previous monthly high. 0.9651. Previous monthly low. 0.9376. Daily Fibonacci 38.2%. 0.9144. Daily Fibonacci 61.8%. 0.9161. Daily Pivot Point S1. 0.9099. Daily Pivot Point S2. 0.9073. Daily Pivot Point S3. 0.9029. Daily Pivot Point R1. 0.917. Daily Pivot Point R2. 0.9214. Daily Pivot Point R3. 0.9241. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US dollar index bounces off lows near 93.20. Looks to data.http://ntvforex.com. News ID 30415C. 0739 GMT. By Pablo Piovano. DXY meets support in the 93.2015 band post FOMC. The Fed kept the FFTR unchanged at its meeting on Wednesday. Weekly claims and advanced Q2 GDP figures next of relevance. The greenback, when tracked by the US dollar index DXY, is recovering some ground lost after bottoming out in the 93.2015 band, and it manages to post decent gains in the 93.60 region on Thursday. US dollar index bid ahead of key data. Following the drop to levels last seen in May 2018 in the 93.2015 band, the index appears to have regained some composure, and it is now navigating the mid-93.00s as market participants continue to digest the latest FOMC event and shift their focus to the upcoming key data releases. In fact, the Federal Reserve left the Fed funds target range FFTR unchanged as broadly expected on Wednesday. The committee noted the improvement in the economic activity as of late, although it acknowledged that those levels still remain well below pre-coronavirus levels. The Fed also reiterated its commitment to use its full range of tools when it comes to support the economy. In addition, the Fed made no changes to the QE program and extended to December 31 its lending facilities aimed at counteracting the impact of the pandemic on the economy. In the U.S. data space, the weekly initial claims will be once again in the center of the debate, along with the preliminary reading of the GDP for the April-June period. What to look for around USD? The dollar remains under heavy pressure despite the ongoing rebound, as investors keep the bearish stance on the currency unchanged against the usual backdrop of US-China geopolitical jitters, the spread of the pandemic, and efforts to return to a somewhat normal economic activity. Also weighing on the buck, market participants seem to have shifted their preference for other safe havens instead of the greenback on occasional bouts of risk aversion. On another front, the speculative community kept adding to the offered note around the dollar for yet another week, opening the door to a potential development of a more serious bearish trend in the dollar. US dollar index relevant levels. At the moment, the index is gaining 0.26% at 93.50 and a break above 94.20. 38.2% Fibo of the 2017-2018 drop would open the door to 96.03. 50% Fibo of the 2017-2018 drop, and finally 96.98. 55-day SMA. On the other hand, the next down barrier lines up at 93.18 2020 low July 29 seconded by 91.80 monthly low May 18 and finally 89.23 monthly low April 2018. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. S&P 500 futures slip under 3,250 as risk dwindles post-Fed meeting. http://ntvforex.com. News ID 313589. 0059 GMT. By Anil Panchal. S&P 500 futures extends pullback from the weekly high of 3,256. Fed showed readiness to pump the markets, cited need of fiscal measures amid coronavirus woes. U.S. policymakers jostling over the Phase 4 aid package. Senate Leader McConnell hopes to clinch unemployment claim deal on Friday. U.S. GDP becomes the key event of the day. Virus updates, stimulus headlines shouldn't be ignored. S&P 500 futures dropped to 3,248.88, down 0.11%, during the initial hour of Tokyo Open on Thursday. The derivative weighs down as markets turn cautious after the Fed cited coronavirus COVID-19 risks while conveying its bearish bias the previous day. Also weighing the risk barometer is the lack of agreement among the U.S. policymakers on the much-awaited fiscal package. Read breaking: Fed leaves policy rate unchanged, USD weakens modestly with initial reaction. During the early Asia, White House Chief of Staff Meadows said that the senators are nowhere close to the deal. Though, the Senate leader Mitch McConnell, later on, said he hopes of agreement on the jobless claims benefits before they expire on Friday. Even so, the huge difference between the U.S. political parties' bids for the total amount, Democrats are up for $3.5 trillion whereas Republicans propose a $1.0 trillion bundle of help, could derail the final talks. Elsewhere, Reuters came out with the news suggesting the American push to recall U.S. companies from Asia. The news cited senior diplomat to mark the drive, which in turn could escalate the tension between the U.S. and China. It should be noted that the COVID-19 is getting worse in America as it marked the highest daily death toll, over 1,200, on Wednesday. The same contributed to the 665K global numbers of deaths due to the pandemic. Amid all these catalysts, U.S. 10-year Treasury yields remain depressed below 0.58% whereas the 5-year counterpart drops to the record low of 0.25%. However, Japan's Nikkei 225 and Australia's ASX 200 flash mild gains by the press time. Although risk factors are likely to be the key while searching for near-term market direction, today's preliminary readings of the U.S. Q2 GDP, expected 35.1% versus 5.0% prior, could also be the key. Read U.S. second quarter GDP preview. Are there any shocks left? Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CNH struggles around 7.000 as US dollar consolidates Fed-led losses. http ntvforex.com news ID 342A8E. 4 minutes ago. By Anil Panchal. USD CNH recovers from intraday low of 6.9916, defies the previous day's losses. The surge in the coronavirus cases in China and the US joins hopes of fiscal stimulus from America. US dollar retraces from the lowest since June 2018 following the heavy rush to the south past FOMC. USD CNH picks up the bids around 6.9975 during the early Thursday. The quote recently benefited from the latest coronavirus COVID-19 updates from American and Beijing. Also supporting the pair's U-turn from a 2-day low is the latest news that increases odds of the much-awaited fiscal package from the U.S. Reuters cites the Chinese Health Commission to mark an increase in the pandemic cases on Thursday. As per the recent update, the Dragon Nation reported 105 new versus 101 marked a day earlier. Out of the total, 96 were in the far western region of Xinjiang, 5 were in the northeastern province of Liaoning, 1 was in Beijing, and 3 were imported cases, according to a statement by the National Health Commission, mentioned the news. There are a total of 84,165 confirmed cases in the Asian major as of Wednesday. On the other hand, the total numbers of new cases cross 4.5 million with the latest surge in the death toll, by over 1,200, marking 665K numbers of people who died due to the virus. Following his signals that the deal on the unemployment claims benefit could be reached on Friday, the day of the stimulus expiry, U.S. Senate Leader Mitch McConnell opens the door to a smaller COVID-19 relief package than the $1.0 trillion proposal unveiled by Republicans earlier this week. This helps the U.S. dollar to recover the multi-year low. The U.S. dollar index DXY slumped to 93.17, the lowest since June 14, 2018, the previous day. The move could be traced from the Federal Reserve's bearish bias and the increase in the pandemic numbers, not to forget uncertainty over the fiscal package. Market's risk tone sentiment remains sluggish as the U.S. Treasury bonds and stock futures print mild losses, whereas stocks in Asia-Pacific mark gains. Trader may now wait for the U.S. Q2 GDP figures for fresh impulse while keeping eyes on the risk catalysts. While the forecasts suggest 35.1% of figures versus 5.0% prior contractions, any upside surprises could help the greenback to extend the latest pullback. Technical analysis. A downward sloping trend line from June 4, at 7.0200, followed by a 200-day SMA level around 7.0330, restricts the pair's near-term upside. Additional important levels. Overview. Today last price. 6.9972. Today daily change. 0.0000. Today daily change percent. 0.00. Today daily open. 6.9972. Trends. Daily SMA 20. 7.0088. Daily SMA 50. 7.0618. Daily SMA 100. 7.0769. Daily SMA 200. 7.0337. Levels. Previous daily high. 7.0096. Previous daily low. 6.9948. Previous weekly high. 7.0304. Previous weekly low. 6.9642. Previous monthly high. 7.1518. Previous monthly low. 7.04. Daily Fibonacci 38.2%. 7.0005. Daily Fibonacci 61.8%. 7.004. Daily Pivot Point S1. 6.9915. Daily Pivot Point S2. 6.9858. Daily Pivot Point S3. 6.9767. Daily Pivot Point R1. 7.0063. Daily Pivot Point R2. 7.0154. Daily Pivot Point R3. 7.0211. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://me.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold lousy US GDP data to trigger a sell the fact. http://ntvforex.com news ID 34EBE3. 0633 GMT. By NTV Forex Team. Gold XAU USD witnessed another attempt to the upside on Wednesday and tested the record highs of $1,981.34 after the U.S. Federal Reserve Fed struck a dovish tone. On Thursday, the yellow metal is easing, as the Fed's dovishness lifted the sentiment on the global markets, although the optimism was capped by the U.S. fiscal wrangling and nervousness ahead of the key U.S. Q2 preliminary GDP report, due later today at 12:30 GMT. What's more, technical setup points to further correction. NTV Forex's Dwani Mehta briefs. Key quotes. Markets have already priced in the terrible GDP report and dovish Fed. Therefore, the bright metal could likely see sell the fact trading in play on the data release, as the greenback could attempt a comeback amid resurgent safe haven demand. The focus will also remain on the impending U.S. stimulus talks and fresh virus updates. The retracement from post-Fed highs and the subsequent consolidation around $1,965 has carved out an ascending triangle formation on the hourly chart. The pattern will get validated should the price close the hour below the rising trend line support at $1,957. The immediate cushion is aligned at the horizontal 50-hourly simple moving average HMA at $1,953. A break below which the upward sloping 100 HMA at $1,937 could likely offer some respite to the XAU bulls. The hourly RSI has turned south and looks to pierce through the midline from above, indicating that the downside appears more compelling. If the bulls manage to defend the critical 21 HMA at $1,962.65, a bounce back towards the confluence of the record highs and the horizontal trend line resistance just above $1,981 cannot be ruled. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. SP500 Trade Review: How to Trade Breakout with Increasing Winning Rate Video Analysis. http://ntvforex.com News ID 3557DE 7/30/2020 9:58 1 am. Yesterday bullish action in S&P 500 future ES with a commitment above the axis line at 3,230 is constructive for a bullish case. As long as the support level at 3,190 hold, S&P 500 should challenge higher targets. Check out the video for a complete walkthrough of the daily market analysis of S&P 500 futures ES for July 30, 2020 trading session. In this video, I am going to show you the market recap on the last session, plus a trade review in the M3 timeframe including entry, exit, and the rationale behind. That trade was initiated during the US session and I will elaborate more on how to trade breakout with increasing winning rate. Going forward, I will cover the bias, the key levels to pay attention to, the potential setup for the US session later. Check out my daily market analysis video yesterday if you haven't in order to better relate to the market recap and the trade review. Bias neutral day trading bullish long term. Key levels: resistance 3,230, 3,260, 3,310, 3,340, support 3,190, 3,170, 3,180, 3,105. Potential setup: look for potential reversal setup near the key support and resistance levels. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Midday market update: crude oil down 3% at home, group shares spike higher, analysis. http://ntvforex.com News ID 36BA33 7/30/2020 4:49 p.m. Midway through trading Thursday, the Dow traded down 1.20% to 26,221.54 while the Nasdaq rose 0.01% to 10,543.55. The S&P also fell, dropping 0.76% to 3,233.65. The U.S. has the highest number of coronavirus cases and deaths in the world, reporting a total of 4,427,490 cases with around 150,710 deaths. Brazil confirmed a total of over 2,552,260 COVID-19 cases with 90,130 deaths, while India reported a total of at least 1,582,020 confirmed cases and 34,950 deaths. In total, there were at least 17,054,810 cases of COVID-19 worldwide with over 667,700 deaths, according to data compiled by Johns Hopkins University. Leading and lagging sectors. Consumer discretionary shares gained 0.3% on Thursday. Meanwhile, top gainers in the sector included At Home Group Incorporated Home 38.21%, up 40%, and Blink Charging Co. BLNK 32.33%, up 34%. In trading on Thursday, energy shares tumbled by 3.9%. Top headline: Procter & Gamble COPG 2.6% reported better than expected results for its fourth quarter. Procter & Gamble posted quarterly earnings of $1.16 per share, exceeding analysts' estimates of $1.01 per share. The company reported sales of $17.70 billion, surpassing expectations of $16.97 billion. PG announced it expects all-in sales growth of 1% 3% year-over-year and EPS growth of 3% 7% year-over-year. Equities trading up. Doping Incorporated TAOP 2,924.42% shares shot up 428% to $10.77 as the company disclosed that it has upgraded its Doping Smart Cloud platform to expand its business. On Wednesday, TAOP reported a 1-for-6 reverse stock split, effective July 30. Shares of Edesa Biotech, Incorporated EDSA 113.05% got a boost, shooting 124% to $11.66 after the company filed an IND application for a Phase 2/3 coronavirus study. At Home Group Incorporated Home 38.21% shares were also up, gaining 42% to $13.37 after reporting preliminary results for the second quarter. The company reported preliminary net sales of roughly $515 million and a comparable store sales increase of around 42%. Equities trading down. Genisha Biosciences, Incorporated GNCA 32.39% shares tumbled 34% to $3.30 after the company said initial clinical data on the first 5 patients from Part B of a Phase 1/2 study that's exploring the combination of Gen 009 and immune checkpoint inhibitor-based regimens in advanced solid tumors showed that 3 achieved independent RECIST responses starting from the first Gen 009 dose. Shares of Kraton Corporation CRA 24.57% were down 25% to $13.85 after reporting results for its second quarter. Urban Tea, Incorporated MYT 25.2% was down, falling 28% to $0.4309 after the company priced its 15 million share offering at 40 cents per share. Commodities. In commodity news, oil traded down 3.1% to $39.98, while gold traded down 0.7% to $1,940.50. Silver traded down 4.2% Thursday to $23.315, while copper fell 0.6% to $2.9015. Eurozone. European shares were lower today. The Eurozone STOXX 600 fell 2.16%, the Spanish IBEX index fell 2.91%, while Italy's FTSE MIB index declined 3.28%. Meanwhile, the German DAX 30 dropped 3.45%, French CAC 40 fell 2.13% and UK shares fell 2.31%. Economics. The U.S. economy shrank by an annualized rate of 32.9% during the second quarter, versus analysts' expectations of a 34.1% contraction. U.S. initial jobless claims increased 1.43 million for the week ended July 25, versus analysts' estimates of 1.45 million. Domestic supplies of natural gas climbed 26 billion cubic feet for the week ended July 24, the U.S. Energy Information Administration reported. However, analysts expected a rise of 23 billion. Data on money supply for the latest week will be released at 4:30 p.m. ET. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD retreats from tops beyond 1.1800, focus on data. http://ntvforex.com news ID 36F042. 6 minutes ago. By Pablo Piovano. EUR/USD gives away part of the recent advance to the 1.18 area. German GDP seen contracting 10.1% QoQ in the second quarter. US flash Q2 GDP, initial claims next of relevance in the NA session. After clinching fresh tops just above 1.18 the figure on Wednesday, EUR/USD has now embarked on a corrective pullback to the mid-1.1700s at the time of writing. EUR/USD looks to data. EUR/USD briefly move above the 1.18 mark for the first time since September 2018 in the wake of the FOMC meeting on Wednesday. Indeed, the pair gained extra upside momentum in response to further weakness in the buck as a result of the dovish tone from the Federal. The Fed, it is worth recalling, left its key rates unchanged and somewhat linked the prospects of economic growth to the progress of the pandemic. In addition, the committee said the economy is recovering but it still navigates in levels below the pre-coronavirus crisis. Data-wise in Euroland, German unemployment rate ticked lower to 6.4% for the current month and the unemployment change decreased by 18K, both prints coming in above estimates. Still in Germany, preliminary GDP figures see the economy contracting more than 10% QoQ during the April-June period, a tad worse the forecasts. Later in the session, several confidence sentiment gauges in the broader Euro bloc are due ahead of German advanced inflation figures. Across the pond, the weekly claims are due, followed by the first estimate of the Q2 GDP. What to look for around EUR? EUR/USD recorded fresh tops just above the 1.18 yardstick on Wednesday, confirming once again the solid momentum around both the single currency and the rest of its risky peers. The sharp move up, while largely triggered by dollar selling, has found extra sustain in auspicious results from the domestic docket, in turn supporting further the view of a strong economic recovery following the coronavirus fallout. Also lending wings to the momentum around the euro, the recently clinched deal on the European Recovery Fund helped putting political fears within the region to rest for now, while the solid position of the current account in the region adds to the rally. EUR/USD levels to watch. At the moment, the pair is losing 0.35% at 1.1750 and faces immediate contention at 1.1495 monthly high March 9 seconded by 1.1448 50% Fibo of the 2017-2018 rally and finally 1.1422 monthly high June 10. On the upside, a breakout of 1.1806 2020 high July 29 would target 1.1815 monthly high separate 24/2018 en route to 1.1852 monthly high June 14 2018. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Silver price analysis XAG/USD prints 3-day losing streak above $24. http://ntvforex.com news ID 3707F3. 22 minutes ago. By Anil Panchal. Silver prices lack upside momentum following its pullback from $26.20. Lower high, overbought RSI keeps the sellers hopeful, $23.30 acts as immediate support. Fresh upside past $26.20 will aim for the early April 2013 top. Silver prices eased to $24.22, down 0.37% on a day, during the initial trading session on Thursday. The white metal has been stepping backward from ever since it surged to the highest since in 7 years on Tuesday. Also increasing the odds of the bullion's further weakness is overbought RSI conditions and a short-term lower high pattern. Though, bullish MACD keeps restricting the bear's entries. As a result, sellers are likely to wait for further confirmation and may cheer downside break of $24 to aim for $23.30, comprising Wednesday's low and last Thursday's high. Following that, lows marked on Tuesday and July 23 could challenge further declines around $22.30-25. In a case where the quote remains weak past $22.25, an ascending trend line from April 14 at $21.55 now, will be in the spotlight. Meanwhile, $25 and $26 may offer immediate upside barriers during the metal's fresh rise ahead of the latest multi-year high of $26.20. If the bulls remain dominant past $26.20, low of April 4, 2013, around $26.65 will become the buyer's favorite. Silver daily chart. Trend pullback expected. Additional important levels. Overview. Today last price. 24.22. Today daily change. 0.09. Today daily change percent. 0.37%. Today daily open. 24.31. Trends. Daily SMA 20. 20.39. Daily SMA 50. 18.73. Daily SMA 100. 16.83. Daily SMA 200. 17.18. Levels. Previous daily high. 24.96. Previous daily low. 23.31. Previous weekly high. 23.26. Previous weekly low. 19.26. Previous monthly high. 18.39. Previous monthly low. 16.95. Daily Fibonacci 38.2%. 23.94. Daily Fibonacci 61.8%. 24.33. Daily Pivot Point S1. 23.43. Daily Pivot Point S2. 22.55. Daily Pivot Point S3. 21.79. Daily Pivot Point R1. 25.07. Daily Pivot Point R2. 25.84. Daily Pivot Point R3. 26.72. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. IOTA Market Update. IoT USD bulls push the throttle to 30 cents. http ntvforex.com News ID 374EC1. 13 minutes ago. IOTA tests the critical hurdle at 30 cents but retreats to $0.2921. IOTA is still seated above the Ichimoku Kinko green cloud, reinforcing the bullish case for the near term. IOTA has since Wednesday been at the helm of cryptocurrency recovery. While major assets such as Bitcoin took a step back from their respective rallies, IoT USD remained focused on the mission to bring down the resistance at 30 cents. As reported in the previous price analysis, the position above the Ichimoku Kinko green cloud means that buyers are mainly in control. IoT USD has tested the hurdle at 30 cents but retreated slightly to $0.2921 prevailing market value. A break above 30 cents is likely in the coming sessions and could see IOTA extend the rally to higher levels at 35 cents and 40 cents respectively. Meanwhile, the technical picture highlights the possibility of consolidation taking over under 30 cents in the near term. This situation is brought to light by the sideways moving RSI as well as the MACD. The former is holding at the overbought 70 movement. Either up or down can detect the direction the price will take following the consolidation. As for the MACD, a minor bullish divergence hints that buyers have an upper hand and that the trend has an inclination to upward price action. In addition, the gap made by the 50-day SMA and above the 200-day SMA clearly shows that bulls have a higher influence over IoT USD. If declines come into the picture, IOTA is likely to bounce off initial support at $0.2750. Additional losses would seek anchorage at the accelerated trend line broken, the 50-day SMA $0.2413, the main trend line black continuous, the 200-day SMA $0.2175.20. IoT USD Daily Chart. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD JPY risks a potential breach of 105.00 ULB. http://ntvforex.com News ID 39624F 071 GMT. By Pablo Piavano. FX strategists at ULB Group believe USD JPY still faces a probable break below the 105.00 level in the next weeks. Key quotes. 24. Our view yesterday, we held the view that USD could grind lower to 104.80 and the next support at 104.40 is unlikely to come into the picture. Our view was not wrong as USD dipped to 104.75 before recovering. Downward momentum has eased and for today, USD is expected to consolidate and trade between 104.75 and 105.30. Next 3 weeks USD dropped by 0.71% yesterday, closed at 105.37 and downward momentum has improved further. We continue to hold a negative view and as highlighted yesterday July 27, spot at 105.90. The next level to focus on is at 105.00. In view of the strong downward momentum, a break of 105.00 would not be surprising. That said, shorter-term conditions are oversold and the next support at 104.40 is unlikely to come into the picture so soon. All in, USD has to move above 106.30. Strong resistance level was at 106.80 yesterday in order to indicate the current weakness has stabilized. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. UK government to expand COVID-19 rescue loan scheme. http://ntvforex.com News ID 39015. July 29, 2342 GMT. By Ross J. Burland. The Guardian has reported that the government is expanding its COVID-19 rescue loan scheme to cover small businesses on the edge of collapse, a move that Labour warned would come too late for many troubled firms. Lead paragraphs. With less than a week before the furlough scheme covering 9 million employees is cut back, plunging more employers into debt, the Treasury said it would use a change in EU state aid rules to allow firms previously locked out of the coronavirus business interruption loan scheme spills to access government funds. The Economic Secretary to the Treasury, John Glenn, said he would write to major lenders advising them of the change, which will make more small businesses, specifically those that have racked up large losses and debts, eligible for loans of up to 5M. By the end of June, more than 1 billion had been lent to more than 50,000 businesses under spills. Market implications. This is positive for GBP bulls in light of the Brexit uncertainty. Overall, a broad weakening on the greenback has been a major contributor to G10FX. Also, hopes for a vaccine has fueled optimism in the markets, and news that Britain has signed a supply deal for up to 60 million doses of a possible COVID vaccine will be a positive input for selling markets in general. However, with Brexit negotiations deadlocked, the other pillars of monetary policy in the UK economy could well come crashing down for the pound later this year. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Wall Street close a bleak outlook for U.S. weighs on stocks and the U.S. dollar. http://ntvforex.com News ID 3C5DC7. 2 minutes ago. By Ross J. Berland. DJIA fell 225.92 points, or 0.85%, to 26,313.65. SPX lost 12.22 points, or 0.38%, to 3,246.22. NDX bucked the trend and added 44.87 points, or 0.43%, to 10,587.81. Wall Street's stocks were declining on Thursday over concerns about earnings, U.S. data, stimulus, and the U.S. elections. Firstly, U.S. elections are now coming to the fore of the market's playing field. Both the S&P 500 and Dow closed lower and had wobbled during the session when the U.S. President Donald Trump exacerbated investor nervousness in a tweet, floating the possibility delaying the U.S. presidential election. With universal mail-in voting not absentee voting, which is good, 2020 will be the most inaccurate and fraudulent election in history. It will be a great embarrassment to the USA. Delay the election until people can properly, securely, and safely vote. Donald J. Trump at Real Donald Trump July 30, 2020. The tweet provoked an array of congressional Republicans to respond, including more than a dozen members in both the House and Senate and in the party's leadership, who openly rejected President Donald Trump's suggestion. It is argued that it is a move that the president would have no authority to make because the Constitution gives Congress the power to set the date for voting. Speaker Nancy Pelosi responded by citing that the congressional authority needed to do so. Article 2, Section 1 of the Constitution states the Congress may determine the time of choosing the electors, and the day on which they shall give their votes, which day shall be the same throughout the United States, Pelosi tweeted Thursday. U.S. economy plunges a titanic 32.9%. In data, Q2 gross domestic product fell a record 32.9% seasonally adjusted annualized rate SAR. That translates into an 8.2% QQ drop. The weakness in GDP was broad-based, affecting personal consumption, capex, and state and local government spending, exports, and inventories, analysts at ANZ Bank noted. Exports fell 64.1% SAR, gross private domestic investment fell 49% and equipment spending dropped 37.7%. The data crystallized the huge output gap and the extensive disinflation pressures the economy faces. Interest rates will not be rising for a long time, and this highlights the need for ultra-easy policy settings. Additionally, U.S. initial jobless claims rose to 1.434 MVS and upwardly revised 1.422 M the prior week. The earlier improvement in the jobs market is stalling, and the rise in continuing claims is a particular concern, indicating that the rehiring of furloughed workers has halted. Continuing claims rose to 17.02 MVS 16.15 M. The analysts IANS said. While the data painted a worrying economic picture, this came on a crucial day for corporate earnings reports. The main earnings focus on Thursday was on reports from high flyers including APPL, Google parent Alphabet Inc. Goog and Facebook Inc. FB and Amazon.com Inc. AMZN. Alphabet Incorporated met street expectations despite a dip in advertising that bedeviled the company for a second straight quarter. The company Google reported net income of $6.96 billion, or $10.13 a share, compared with net income of $9.95 billion, or $14.21 a share, in the year-ago quarter. Revenue after removing traffic acquisition costs declined to $31.6 billion from $31.7 billion in the year-ago period. After the bell, shares in Facebook rose 8% and Amazon climbed 6% following their reports, while Alphabet climbed 2%. Lastly, the expiration of enhanced employment benefits on Friday weighed on sentiment today as U.S. Congress was no closer to a deal that could extend or replace the extra $600 per week in payments to tens of millions thrown out of work by the coronavirus. Subsequently, the Dow Jones Industrial Average DJI fell 225.92 points, or 0.85%, to 26,313.65, the 500 SPX lost 12.22 points, or 0.38%, to 3,246.22. The Nasdaq Composite bucked the trend and added 44.87 points, or 0.43%, to 10,587.81. US dollar down for longer. Meanwhile, the US dollar is under immense scrutiny, down 0.35% in the day. DXY dollar liquidity plentiful thanks to the Fed, markets increasingly bearish on US outlook. SP 500 index levels. Overview. Today last price. 3,245.75. Today daily change. 2.75. Today daily change percent. 0.08. Today daily open. 3,248.5. Trends. Daily SMA 20. 3,204.81. Daily SMA 50. 3,130. Daily SMA 100. 2,923.73. Daily SMA 200. 3,050.7. Levels. Previous daily high. 3,252. Previous daily low. 3,224.25. Previous weekly high. 3,293. Previous weekly low. 3,199.75. Previous monthly high. 3,233.25. Previous monthly low. 2,936.5. Daily Fibonacci 38.2%. 3,241.4. Daily Fibonacci 61.8%. 3,234.85. Daily Pivot Point S1. 3,231.17. Daily Pivot Point S2. 3,213.83. Daily Pivot Point S3. 3,203.42. Daily Pivot Point R1. 3,258.92. Daily Pivot Point R2. 3,269.33. Daily Pivot Point R3. 3,286.67. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD price analysis trades in the red, but eyes fourth straight monthly gain. http://ntvforex.com news ID 3C732C. 35 minutes ago. By Omkar Godbol. AUD/USD trades in the red amid overbought signals on the daily chart. The pair still appears set to end the month on a positive note. AUD/USD is currently trading largely at 0.7173, representing a 0.17% decline on the day, having hit a multi-month high of 0.7197 on Wednesday. Despite the pullback, the pair is still up 4% on a month-to-date basis. The Aussie dollar looks set to end higher for the fourth straight month, having rallied by 6%, 2.4%, and 3.57% in April, May, and June, respectively. The 4-month winning streak is the longest since 2009 and has opened the doors for the test of a 50-month simple moving average hurdle, currently at 0.7279. Supporting the bullish case is the 14-month Relative Strength Index, which has crossed above 50.00 and is hovering at the highest level since early 2018. However, a convincing break above the 50-month SMA may remain elusive for some time, as the 14-day RSI is now reporting overbought conditions with an above 70 print. As such, a pullback to the ascending 10-day SMA, currently at 0.7114, cannot be ruled out. Monthly chart. Trend bullish. Technical levels. AUD/USD. Overview. Today last price. 0.7181. Today daily change. 0.0006. Today daily change percent. 0.08. Today daily open. 0.7187. Trends. Daily SMA 20. 0.7028. Daily SMA 50. 0.691. Daily SMA 100. 0.6592. Daily SMA 200. 0.6695. Levels. Previous daily high. 0.7197. Previous daily low. 0.7148. Previous weekly high. 0.7184. Previous weekly low. 0.6972. Previous monthly high. 0.7065. Previous monthly low. 0.6648. Daily Fibonacci 38.2%. 0.7178. Daily Fibonacci 61.8%. 0.7167. Daily Pivot Point S1. 0.7158. Daily Pivot Point S2. 0.7129. Daily Pivot Point S3. 0.7109. Daily Pivot Point R1. 0.7207. Daily Pivot Point R2. 0.7226. Daily Pivot Point R3. 0.7256. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD JPY pulls back from multi-day low to regain 105.00. http ntvforex.com news ID 3CE6A9. 0015 GMT. By Anil Panchal. USD JPY extends latest recovery despite upbeat Japanese retail trade data. Japan's retail trade beat expectations in June, risk-off also in play. US Fed keeps further easing on the table, fiscal action more likely despite deadlock in talks. BOJ policymakers suggest furthering of negative rates if needed after Nikkei signaled downgrade in Japanese GDP forecast. USD JPY takes rounds to 105.00 as Tokyo opens for Thursday's trading. The pair recently picked up the bids despite the US dollar's broad weakness after the Federal Reserve's bearish outcome. In doing so, the quote also ignores upbeat Japanese data and the market's risk aversion. Japan's retail trade recovered from 6.5% forecast and 12.5% revised prior to 1.5% in June. Further details suggest that the monthly prints of seasonally adjusted figures grew past 7.1% market consensus to 13.1%. The data adds to the broad strength of the Japanese yen versus its US counterpart. Though, the market is more concerned about the later issue off late. US dollar weakness gains more attention. Be it the worsening of the coronavirus COVID-19 conditions or the policymakers' deadlock over Phase 4 of the stimulus package, not to forget the bearish Fed, the US dollar has to bear the burden of everything and trade south. America is unfortunately the biggest victim of the pandemic with over 4.0 million new cases and death toll crossing 665K. The second wave has already hit reopening optimism and is pushing the decision makers, be it at the Federal Reserve Fed or political front, to combat the pandemic. However, the delay in announcing the much-anticipated aid package and the central bank governor's bearish bias, highlighting the virus fears, offered the latest weakness to the greenback. On the other hand, Bank of Japan BOJ Deputy Governor Masayoshi Amamiya said on Wednesday that they want to rule out a deepening negative rate if the central bank eases further. Further, Nikkei came out with the news saying that the Japanese government will forecast for the years 2020-21 a real gross domestic production contraction of around 4.5%, revising its pre-coronavirus projection for a 1.4% growth. Elsewhere, Fitch downgraded the Asian major's credit outlook to negative while maintaining its sovereign rating at A. Amid all these plays, U.S. 10-year Treasury yields stay on the back foot below 0.58%, whereas S&P 500 futures drop 0.10% to 3,250 by the press time. Looking forward, the pair traders will keep eyes on the preliminary readings of the second quarter Q2 U.S. GDP readings, expected 34.1% versus 5.0% prior, for fresh impulse. However, headlines concerning the virus and U.S. fiscal package talks, not to ignore Sino-American tussles, will keep entertaining the markets. Technical analysis. Wednesday's bearish spinning top candlestick on the daily chart highlights the pair traders' indecision, which in turn gains support from oversold RSI conditions to trigger the latest bounce off fresh lows since March 13. Though, bulls are less likely to be convinced unless witnessing a clear break of 106.00. Meanwhile, a downward sloping trend line from May 29, at 104.48 now, grabs the seller's immediate attention. Additional important levels. Overview. Today last price. 105.05. Today daily change. 0.13. Today daily change percent. 0.12%. Today daily open. 104.92. Trends. Daily SMA 20. 106.83. Daily SMA 50. 107.3. Daily SMA 100. 107.57. Daily SMA 200. 108.29. Levels. Previous daily high. 105.24. Previous daily low. 104.77. Previous weekly high. 107.54. Previous weekly low. 105.68. Previous monthly high. 109.85. Previous monthly low. 106.08. Daily Fibonacci 38.2%. 104.95. Daily Fibonacci 61.8%. 105.06. Daily Pivot Point S1. 104.72. Daily Pivot Point S2. 104.51. Daily Pivot Point S3. 104.24. Daily Pivot Point R1. 105.18. Daily Pivot Point R2. 105.45. Daily Pivot Point R3. 105.66. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Traders refocus on FOMC policy analysis. http://ntvforex.com News ID 3DC0B6 7/30/2025 56:15 AM. Before placing bets, the traders are waiting for the Federal Open Market Committee meeting outcome. The Fed policy comes at a difficult time for the U.S. economy. The U.S. economy is still grappled with rising coronavirus cases and has to deal with the impact of the pandemic. The number of COVID-19 cases is rising and many states have scaled back their reopening plans. So the reality is that the U.S.'s economy is going through a roller coaster ride and is still facing a very uncertain economic environment. Eventually, the nation will realize how big a bite the pandemic had knocked the economy. But until then, both the fiscal and the monetary authorities will have to do whatever it takes to keep the economy churning. So far, the Fed's aggressiveness in easing financial conditions have also succeeded in halting a further decline in the U.S. economy. All this while, the U.S. administration was expected to double down its fiscal stimulus measures. The hopes of an increase in stimulus packages was keeping the gold prices higher, and MCX gold breached all-time high of 52,750 and is currently hovering around 52,570. While dollar index sharply slumped to a two-year low of 93.47. However, the rally in gold paused and profit booking was observed after Trump said that he did not support everything in a $1 trillion Senate Republican coronavirus relief proposal. On the other hand, dollar index gained grounds as Federal Open Market Committee began its two-day monetary policy. Whilst the rally in the precious metal is pausing for breath, there are doubts whether it has reached a peak. Today, we expect the Fed to keep Fed fund rate near 0.25% and the accompanying monetary policy statement to be relatively dovish considering that the number of coronavirus cases is rising. Fed Chair Powell will reiterate that the central bank will demonstrate whatever it takes, beyond interest rate cuts and asset buying, to restore financial market stability, smooth out U.S. dollar funding conditions and safeguard the economy. As seen in the following chart, the inverse relationship between gold and dollar will continue. The expectations of a dovish Fed, willing to see inflation pass its target before rates will rise, will potentially add more pressure to the US dollar. A weak greenback is gold positive, making it cheaper for international buyers. MCX gold has been consistently breaching all the key resistances due to ongoing mixed sentiments. Traders playing cautiously, keeping gold's safe haven card in hand. However, RSI at hovering around 86.7, which indicates overbought position in gold, and hence we expect the yellow metal prices to witness a small dip on account of profit booking at higher levels till 51,600–50,800. The worries over escalating tensions between the US and China, as well as the ongoing domestic disaster that is Trump's handling of the COVID-19 pandemic, will add pressure on dollar index and keep gold afloat. Overall, our view for gold remains bullish for medium term. Hence, every dip is a buying opportunity in gold. On upside, recent high will act as immediate resistance, and consistent trading above 52,750, then doors will be open for 53,600–54,100 top-to-top trend line as well as 88.2% Fibonacci projection levels. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD price analysis after a brief wobble. Normal services resumed. http://ntvforex.com. News ID 42B3D9. 13 minutes ago. By Rajan Dul, MSTA. EUR/USD has spent most of Thursday in the red, but now the pair has moved back to flat. The US market participants have reversed most of the EU/US dollar selling. EUR/30 minute chart. EUR/USD has struggled for most of the session, and recently the price has printed above the previous wave high. After yesterday's FOMC rate decision and press conference, the market continued in its path of selling the dollar, but overnight and in the EU session some of those moves had been reversed as the greenback recovered some of the losses against all but the pound GBP. The chart below shows a consolidation pattern, but the most recent price waves have been making higher lows. This is reflected by the blue trend line at the bottom of the consolidation structure. Now the red resistance zone seems to be under threat, and adding to this, for a brief moment the price spiked through the previous wave high of 1.1806. If the bulls cannot sustain a move beyond the 1.18 figure, the next support is at the red line near 1,1770. A reversal could be confirmed if the whole pattern is broken to the downside. The indicators have turned back to the bullish side after a brief move lower. The relative strength index now has some more room to move into the overbought area. The MACD histogram is still green and the signal lines are nicely back above the midpoint. Overall, this is an uptrend, but the strength of the trend is now being called into question. No doubt the US close will be important, as we could see if the test of the old highs are rejected, and it could be an important signal. Additional levels. Euro USD. Overview. Today last price. 1.179. Today daily change. 0.0001. Today daily change percent. 0.01. Today daily open. 1.1791. Trends. Daily SMA 20. 1.145. Daily SMA 50. 1.1297. Daily SMA 100. 1.1096. Daily SMA 200. 1.1082. Levels. Previous daily high. 1.1807. Previous daily low. 1.1714. Previous weekly high. 1.1658. Previous weekly low. 1.1402. Previous monthly high. 1.1422. Previous monthly low. 1.1097. Daily Fibonacci 38.2%. 1.1771. Daily Fibonacci 61.8%. 1.1749. Daily Pivot Point S1. 1.1734. Daily Pivot Point S2. 1.1678. Daily Pivot Point S3. 1.1642. Daily Pivot Point R1. 1.1827. Daily Pivot Point R2. 1.1863. Daily Pivot Point R3. 1.192. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Euro USD lose-lose situation for the dollar to allow further gains. http ntvforex.com news ID 44F2C7. 4 minutes ago. By NTV Forex team. Euro USD is trading above 1.1730, retreating after the Fed but shrugging off weak German GDP. The pair could surge to new highs in response to US GDP data, Yohai Elam, an analyst at NTV Forex, reports. Key quotes. The euro is showing its strength after Germany reported a fall of 10.1% quarterly in the second quarter, and 11.7% annually, both below expectations. Perhaps the common currency is benefiting from upbeat employment figures in Germany. The number of unemployed dropped by 18,000 compared with an expected increase. Markets could be seeing through data related to the worst days of coronavirus and are encouraged by Europe's emergence from the pandemic. While some countries are experiencing flare-ups, the situation is under control. That contrasts with the US, where the daily death toll continues rising, hitting a high of over 1,400. The caseload has stabilized yet at an elevated rate of around 70,000. The Fed left its policy unchanged but expressed concerns about the impact of the virus. Chairman Jerome Powell said that high-frequency data is showing economic softening since the coronavirus cases began rising in mid-June. While he committed to using all available tools, he was short on detail and left that to after the Fed completes a review process. Weekly jobless claims are set to show an ongoing worrying situation in America's labor market, but these figures will likely compete with the first read of GDP for the second quarter. Economists foresee a crash of 34.1% annualized, the worst on record. It is essential to note that estimates are within a broad range and high volatility is likely. Markets may shrug off an upbeat data or react negatively to adverse figures, assuming the weak second quarter is preceding an even worse third quarter. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD slips near 15-month high, strongly bullish in medium-term. Video analysis. http://ntvforex.com news ID 4576FE 7/30/2028 41:34 AM. AUD/USD is edging slightly lower after reaching a 15-month high of 0.7185 but is still holding a strong upside tendency since March 19. The stochastic oscillator is pointing down, ready to post a bearish cross within its %K and %D lines in the overbought zone, suggesting some losses in the short term. However, the MACD oscillator is strengthening its upside structure above its trigger and zero lines. In case the pair extends the pullback, immediate support could come from the 0.7030-0.7067 area, which encapsulates the 20-day simple moving average SMA. Marginally below this line, the 40-day SMA at 0.6970 could be in focus ahead of the 0.6800 psychological mark. A break below the latter may pause near the 200-day SMA, which overlaps with the lower surface of the Ichimoku cloud and the 0.6685 barrier. Alternatively, a successful climb above the 15-month peak 0.7185 could open the way to the 0.7295 resistance, taken from the high on February 2019. Beyond that, the 0.7395 hurdle, identified by the peak on December 2018, may next attract attention. All in all, AUD/USD sustains a bullish mode in the bigger picture. A break below the 200-day SMA may shift the outlook to neutral. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD breaks higher and hits 2-year highs above 1.1830. http://ntvforex.com news ID 46309D. 25 minutes ago. By Matthias Salord. EUR/USD rises to news cycle highs as the US dollar resumes slide. DXY drops to 93.00, reaching fresh 2-year lows. The EUR/USD rose back above 1.1800, and it kept running. It rose above 1.1830, reaching the highest level since June 2018, supported by a weaker US dollar across the board. The greenback remains under pressure, and after a brief recovery, it turned again to the downside. The DXY is falling by 0.40%, slightly above 93.00, at fresh multi-year lows. The USD sell-off continues across the board. No matter what the Federal Reserve or the data points to, the sentiment continues to be against the US dollar. The rise in US jobless claims did not help the greenback, neither the Q2 GDP report showing a 32.9% contraction. Lower US yields also contribute to the broad-based weakness of the greenback. It is rising modestly versus commodity and emerging market currencies, but it trimmed gains during the American session as Wall Street indexes moved off lows. Technical levels. The EUR/USD is trading at the new high at 1.1835. The next resistance might be located at 1.1850 June 2018 high and above at 1.18880. On the flip side, now the 1.180005 area is the immediate support, followed by 1.1775. The euro has risen in 13 out of the last 15 trading days versus the US dollar. From a week ago, it gained almost 300 pips. Despite technical readings showing overbought readings, the pair kept rising, and so far, no signs of a correction are seen, and it appears to be accelerating the move higher. EUR/USD. Overview. Today last price. 1.183. Today daily change. 0.0039. Today daily change percent. 0.33. Today daily open. 1.1791. Trends. Daily SMA 20. 1.145. Daily SMA 50. 1.1297. Daily SMA 100. 1.1096. Daily SMA 200. 1.1082. Levels. Previous daily high. 1.1807. Previous daily low. 1.1714. Previous weekly high. 1.1658. Previous weekly low. 1.1402. Previous monthly high. 1.1422. Previous monthly low. 1.1097. Daily Fibonacci 38.2%. 1.1771. Daily Fibonacci 61.8%. 1.1749. Daily Pivot Point S1. 1.1734. Daily Pivot Point S2. 1.1678. Daily Pivot Point S3. 1.1642. Daily Pivot Point R1. 1.1827. Daily Pivot Point R2. 1.1863. Daily Pivot Point R3. 1.192. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin held by exchanges drops to 2019 bull run levels, demand rising. http://ntvforex.com news ID 4642B0. 2 minutes ago. Bitcoin balances on major exchanges dropped to levels not seen since last summer's bull run as demand and BTC price are on the rise. As July comes to a close, the amount of Bitcoin BTC held by major cryptocurrency exchanges has reached its lowest level since late May 2019. At that time, Bitcoin's price was around $8,000 before continuing toward its 2019 high of $12,967 on July 11, 2019. Roughly 10% of Bitcoin held by exchanges. The Bitcoin balance held by major exchanges has been dropping significantly since mid-March 2020 following the Black Thursday crash on March 12 and subsequent recovery. There are 2.64 million BTC collectively held on exchanges as of July 29, according to data from Glassnode, a market and on-chain analytics resource. Meanwhile, Bitcoin's price continues to climb and recently hitting a yearly high of $11,400. Bitcoin exchange balance vs Bitcoin price. Source: Glassnode. Lower selling pressure plus Tether inflows. Additionally, markets analytics firm, Arcane Research, noted that decreasing balances on exchanges suggest users are showing more interest in holding their Bitcoin for the long term by withdrawing their BTC from exchanges to control their own private keys directly. This trend means less selling pressure from BTC holders and comes just 2 months after the 2020 halving that reduced the amount of newly mined Bitcoin in half. Coupled with the recent increase in Tether USDT exchange inflows, which have reached their 2020 high yesterday, an overall supply that's now over $10 billion, the number of digital dollars waiting on the sidelines to potentially buy BTC is bigger than ever. Institutional and retail interest in Bitcoin returns. Bitcoin has been looking increasingly attractive lately given its store of value attributes in the face of the inflating US dollar. With yet another COVID-19 stimulus package and what seems to be an overheated stock market, many traders are now seeking the safety of hard assets such as gold and increasingly Bitcoin. Specifically, institutional interest in Bitcoin seems to be picking up at light speed as both BAT and CME futures have posted record numbers for 2 consecutive days in volume and open interest. Additionally, Grayscale has added another $1 billion to its funds in just 11 days, making the total AUM over $5.1 billion across their entire family of products. CME and BAT Bitcoin futures total open interest and volumes. Source: skew.com. As for the retail market, records have also been broken as Deribit, the leading Bitcoin options exchange, posted record volumes on July 27 with $527 million in traded Bitcoin options. Therefore, Bitcoin may be finally ready for another major bull market cycle as the supply of Bitcoin on exchanges decreases at the same time as retail and institutional interest appear to be picking up. This confluence of bullish factors has led to numerous bullish forecasts from industry experts, with some even predicting that this new bull cycle may be much bigger this time around. The next Bitcoin bull run will be dramatically different, said Gemini founder Cameron Winklevoss on July 29. Today, there's exponentially more capital, human capital, infrastructure, and high-quality projects than in 2017. Not to mention the very real specter of inflation that all fiat regimes face going forward. Buckle up. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD forecast retreats from 0.7200 area but keeps focus on the upside analysis. http://ntvforex.com News ID 49D022. 7/30/2028 00:18 p.m. AUD/USD staged a limited pullback on Thursday, but bias remains positive. Deteriorating risk sentiment hit the Aussie, although it managed to trim daily losses. The Australian dollar pulled away from a 15-month peak right below the 0.7200 level and posted mild losses against the greenback on Thursday as Fed dovish tone and devastating US GDP figures triggered risk aversion and pushed the AUD/USD to lows at the 0.7120 area. However, a recovery in Wall Street indexes helped the Aussie to recover some of the lost ground during the American afternoon. Technical factors also contributed to the pair's pullback. The AUD/USD failed to break decisively above the 0.7200 psychological level and turned lower instead. Data from Australia showed that the ANZ's business confidence and the activity outlook indexes continued to worsen in July. Additionally, building permits declined by 4.9% on a monthly basis in June. During the upcoming Asian session, private sector credit for June and Q2 PPI figures will be released. AUD/USD short-term technical outlook. Technical indicators in the 4-hour chart maintain a slightly bullish tone, while the price has managed to recover above the 20-period SMA. In the daily chart, the positive stance is somewhat stronger, although the RSI remains in overbought territory, suggesting some consolidation ahead. A clear break above 0.7200 is needed to pave the upward way. Support levels 0.7120, 0.7070, 0.7040. Resistance levels 0.7200, 0.7240, 0.7280. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/GBP keeps the red near session lows, around mid 0.9000s post German GDP. http://ntvforex.com News ID 49EBD4. 0820 GMT. By Haresh Menghani. The offered tone surrounding the shared currency exerted some pressure on EUR/GBP. Weaker than expected German GDP report did little to provide any meaningful impetus. Investors now eye prelim German inflation figures for some intraday trading opportunities. The euro weakened a bit during the early European session and pushed the EUR/GBP cross to daily lows, around mid 0.9000s post German GDP report. Following a brief consolidation through the early part of the trading action on Thursday, the cross met with some fresh supply and the dropped back closer to over 1-week lows set in the previous day. The downtick was exclusively sponsored by a mildly offered tone surrounding the shared currency, which lost some additional ground following the release of the weaker-than-expected German GDP report. According to the preliminary report published by DestATIS on Thursday, the Eurozone's largest economy contracted by 10.1% during the second quarter of 2020. The reading was worse than consensus estimates, pointing to a fall of 9.0% and the 2.0% decline recorded in the previous quarter. The data failed to provide any impetus to the common currency or extend support to the Euro GBP cross. On the other hand, the British pound was seen consolidating its recent gains and did little to influence the cross. Given that the shared currency has been acting as an exclusive driver of the Euro GBP pair's momentum on Thursday, investors now look forward to the release of prelim German consumer inflation figures to grab some meaningful trading opportunities. Technical levels to watch. Euro GBP Overview. Today last price 0.905. Today daily change 0.0023. Today daily change percent 0.25. Today daily open 0.9073. Trends. Daily SMA 20 0.9047. Daily SMA 50 0.9008. Daily SMA 100 0.894. Daily SMA 200 0.8729. Levels. Previous daily high 0.9087. Previous daily low 0.9035. Previous weekly high 0.9138. Previous weekly low 0.9001. Previous monthly high 0.9176. Previous monthly low 0.8864. Daily Fibonacci 38.2%. 0.9067. Daily Fibonacci 61.8%. 0.9055. Daily Pivot Point S1. 0.9043. Daily Pivot Point S2. 0.9013. Daily Pivot Point S3. 0.8991. Daily Pivot Point R1. 0.9095. Daily Pivot Point R2. 0.9117. Daily Pivot Point R3. 0.9147. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis. Full consolidation mode in gold unless these levels are broken. http://ntvforex.com news ID 4A1543. 2 minutes ago. By Rajundal, MSTA. Gold has now consolidated after the FOMC yesterday, which has had a mixed reception. The price is now within a range between $1,940 and $1,981 and 34 cents per ounce. Gold 30 minutes chart. Gold is in consolidation mode after its impressive bull run recently. The price hit a high of $1,981 and 34 cents per troy ounce and now has moved lower and if a firm consolidation zone. $1,940 per ounce is now a support level in the near term, and if it is broken there could be a move lower. The main consolidation low just below $1,910 per ounce. The FOMC rate decision and press conference has led to some confusion with the risk theme in equities markets flip-flopping from the EU to the US session. The indicators have now turned bullish again as the MACD histogram is back in the green. The signal lines are below the midline, but remember this is a short-term chart so it does not too much credence. The relative strength index has now moved above the 50 level and there is lots of space for the indicator could move to the upside. The bulls look like they could be gunning for the $2,000 level. A break of the high on the chart could be the point where the trend could continue to the upside. On the downside, a reversal could be more realistic if the black support line under $1,910 per ounce. It must not be forgotten that the market is still very much in a bull trend, and if the red resistance zone breaks then the trend is very much back on. Additional levels. XAU USD. Overview. Today last price 1954.41. Today daily change 17.04. Today daily change percent 0.86. Today daily open 1971.45. Trends. Daily SMA 20 1838.3. Daily SMA 50 1775.77. Daily SMA 100 1717.1. Daily SMA 200 1625. Levels. Previous daily high 1980.89. Previous daily low 1941.58. Previous weekly high 1906.68. Previous weekly low 1805.86. Previous monthly high 1785.91. Previous monthly low 1670.76. Daily Fibonacci 38.2%. 1965.87. Daily Fibonacci 61.8%. 1956.6. Daily Pivot Point S1. 1948.39. Daily Pivot Point S2. 1925.33. Daily Pivot Point S3. 1909.08. Daily Pivot Point R1. 1987.7. Daily Pivot Point R2. 2003.95. Daily Pivot Point R3. 2027.01. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. FAANG's report the same day analysis. http://ntvforex.com news ID 4B04D1. 7/30/2020 11:45:43 AM. Google and Amazon. Amazon. Corporate earnings and concerns about the impact of new localized lockdown measures due to spikes in coronavirus infections, alongside geopolitical tensions, have been in the mix for nearly a month. Markets remained and will remain glued for the rest of the week to the ongoing stream of earnings reports, as some of the tech giants are reporting today. Yesterday the tech leaders testified in Washington, with the CEOs of Amazon, Apple, Alphabet, and Facebook appearing together before Congress for the first time, after 13 months of investigation by lawmakers into the market power of big tech. Even though the testimony is crucial, the earnings releases for the Q2 of 2020 will likely dominate the market. All four companies' earnings reports are due to come out today after the U.S. market close, who together have a market capitalization value of almost $5 trillion. Amazon, however, is the company that is expected to experience a big surprise in its earnings per share EPS, as the surprise prediction tool has posted a 107.82% increase recently on the expected EPS after an estimate revision from Zacks. In fact, Zacks' most accurate estimate tool for the current quarter is currently at $3.64 per share for Amazon, compared to a broader Zacks consensus estimate of $1.75 per share. This suggests that analysts have very recently bumped up their estimates for Amazon, giving the stock a Zacks earnings ESP surprise prediction tool of 107.82%. According to Refinitiv, Amazon is expected to post a revenue of $81.6 billion, which reflects an increase of more than 14% on revenue on a quarter-over-quarter basis. Despite lockdowns due to pandemic, there are a number of factors in favor of Amazon in Q2. The company's retail sales strategies were very efficient, with huge investments in its infrastructure, something that could prove profitable in this earning report but also the future ones. In general, however, e-commerce firms eBay, Amazon etc. have likely benefited the most from the stay-at-home measures and the closure of retail stores, as a more than 78% spike in online shopping was identified in May. According to Adobe Analytics, the pandemic led to $52 billion in extra online spending, based on actual spend versus prior projections, while May generated $82.5 billion in total online spending, with e-commerce shopping levels tracking above the heavy spending period of November and December 2019. Online shopping in the future could be adopted as the new normal. Additionally, e-commerce demand boosted Amazon in growing its advertising platform and benefiting from advertisements, something that could add up to a strong Q2 and a strong 2020 in general. Especially after the advertising boycott against Facebook that started in July. The widely publicized advertiser boycott against Facebook has less than a week to show it has become a global coalition solid enough, and strong enough, to take on the social media giant. Even though the pandemic caused a spike in Amazon's customers while other businesses either closed or struggled to stay afloat, the company had to spend at huge levels in order to adjust its infrastructure according to COVID-19 restrictions. The spending is rumored to have been given for hiring, delivery infrastructure, delivery vans, safety measures, air fleet expansion for international delivery services, etc. The company's emphasis on drive-in grocery delivery, such as the Amazon Fresh Pickup, and Amazon Go, its first brick-and-mortar grocery store, helped in garnering a strong band of customers. But was the spending reasonable, and how much needs to be spent to get Amazon back to its pre-pandemic normal? Last in my list of positive factors of potential Amazon success is of course its revenue stream, which so far looks to be impressive with or without the pandemic. During the to-be-reported quarter, however, the number of Prime memberships has strengthened significantly due to Prime Free One-Day Service, Prime's Same-Day Service, Amazon Fresh Service, 2-hour delivery service of natural and organic products such as meat and seafood, international delivery services expansion. Amazon extended its partnership with the Air Transport Services Group ATSG to lease 12 additional Boeing 767-300. Additionally, Amazon Prime allows customers to access Prime Video, which is its streaming media service. More Prime subscriptions could be seen also due to the increase of content and the overall portfolio on Prime Video. Hence, all the above are driving the market's expectation for a very successful earnings report for the quarter, but also for the remainder of the year, since all these efforts could be proven beneficial for the long-term outlook of the company, with Amazon eliminating the competition. In summary, the concern could be only on the amount of expenses that the company paid as a response to COVID-19, and whether it significantly exceeded its latest call of $4 billion on infrastructure. Alphabet. Google. Alphabet Incorporated is a holding company and Google's parent company. The company's businesses include Google Incorporated, which is the largest one, and its internet products, such as Access, Calico, Capital G, GV, Nest, Verily, Waymo and X. The company's segments include Google and Other Bets. Alphabet's second quarter earnings for 2020 will be reported along with the rest of the giants. The consensus recommendation for the company is buy to strong buy, corresponding to the majority of the consensus recommendation from Reuters Icon, as 20 and 12 out of 36 analyst firms recommend buy and strong buy respectively. Hence, no analyst firm is making a sell or underperform recommendation for the company. According to Zacks Investment Research and Reuters Refinitiv, the information service is expected to have $8.21 in earnings per share during the second quarter of 2020, which represents a yearly drop of 42% since the reported EPS for the fiscal quarter ending June 2019. Focus should also turn on the revenues number, which is projected to hit a 46% YoY decline, to around $37.37 billion, from the $38.94 billion reported last year and the $41.16 billion reported in the first quarter of 2020. Alphabet has faced some serious legal difficulties during the year, with the federal government and almost every state attorney general having begun antitrust inquiries into Google. The feds are concentrating on bias in searches, on advertising and on the deployment of Google's Android operating platform. However, if we focus on the earnings report for Alphabet Inc., things could turn more optimistic than expected as the pandemic boosted the search giant's quarterly profits due to a boost to the advertising sector similar to Amazon's and due to the growing advertising boycott against Facebook. More precisely, its YouTube business is the one that is expected to strengthen the company's financials in Q2 but also the second half of the year. As analyst Brent Till stated, a combination of positive pricing and demand trends, YouTube's size and reach in connected TV/CTV advertising, and relatively strong positioning in brand safety ensuring that advertisements aren't shown on offensive content make YouTube an attractive place for ad buyers. A good chunk of unspent political advertising budgets should also flow to YouTube ahead of the upcoming elections. The new features in the advertising business by Google are the ones that are increasing momentum in this sector, i.e. local services ads by Google, local opportunity finder, local store information, smart campaigns, and Grow My Store for retailers. Google also made enormous efforts in boosting its e-commerce services as well, by launching a new voice-based grocery shopping service, which allows Google users to voice order groceries with the help of the Google Assistant. Further spending has been seen in Google Cloud in order to expand its revenue streams beyond advertising. Google Cloud generated $8.9 billion in revenue in 2019, a 53% increase over the previous year. Despite this being a highly competitive sector and according to Bloomberg, in May the company had to cancel part of its plans for a major new cloud service in China and other markets deemed sensitive over geopolitical tensions and COVID-19 concerns. It managed to expand the cloud service portfolio and data centers within Q2. During the quarter, the company announced additional plans which could eventually positively impact the upcoming results for 2020, such as $2 billion investment to build a data center in Poland, which should add efficiency to the company. 2 official long-term partnership between Google and Deutsche Bank. The partnership will enable Deutsche Bank to accelerate its cloud transition and build on the engineering capabilities of both companies. Together with Google Cloud, Deutsche Bank will transform its IT architecture and thus generate considerable value for its clients. Partnership of Waymo and Volvo for the development of a new self-driving electric vehicle for use in a ride-hailing service. This deal, along with the acquisition of Latent Logic, strengthened its presence in the booming self-driving vehicles market. Hence the risks that Alphabet faces ahead of the report is the solid competition from Amazon in advertising business and cloud services, but also the increasing expenses which could affect the Q2 report. At this stage, we have to point out that the consensus recommendation, similarly to economic data forecasts, has a significant effect on the near-term stock price, as it represents a company's wealth picture. Hence, on every earning report, stock price is highly influenced by the comparison between the outcome and the expectations. The market tends to react positively if the outcome comes in better or at least in line with the forecast, while the price moves lower if the reported earnings miss expectations. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. WTI oil price falls on growing concerns about global demand outlook analysis. http://ntvforex.com News ID 4B2D2C 7/30/2020 10:40:47 a.m. WTI oil. WTI oil price slipped on Thursday, despite strong and unexpected fall in crude inventories, as rising coronavirus cases weigh heavily on global demand outlook. Disappointing economic data point to bigger than expected contraction of global economies that adds to negative signals. Fresh weakness cracked 30 DMA $40.34 and eyes psychological $40 support, break of which would soften near-term tone and push the price towards the lower boundary of month-long range. Ability to hold above $40 level would keep in play hopes for fresh attempt towards key barriers at $43.05 11 Fibo 61.8% of $65.63 6.52200 DMA. Res 41.00 41.36 41.54 42.00 Sup 40.34 40.00 39.62 39.05 Interested in oil technicals, check out the key levels. R342.34 R242 R141.71 PP 41.37 S141.07 S240.74 S340.44 Updated July 29, 2000 GMT. Full study. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP/AUD price analysis. Bulls looking for a daily HAMP-S completion. http ntvforex.com. News ID 4CF229. July 29, 23 GMT. By Ross J. Berland. GBP/AUD has been in a strong downtrend on the longer-term charts but has found a base at critical support structure. The price can be expected to hold and turn higher. Price action is bullish and a bullish case is on the cards judging by the currency price action. Both GBP and the Aussie have picked up a bit in the wake of a fresh cycle low in the US dollar. From a technical standpoint, there is a bullish case building for the cross, and the following top-down analysis unveils a swing trading forecast and probable forward-looking price action to take advantage of from a daily perspective. Monthly chart. The monthly chart shows a clear target at a 38.2% Fibonacci retracement of the bearish monthly impulse, which has confluence with prior structure. The weekly chart below confirms the upside bias when considering the stop hunt below structure and the bullish bar as subsequent of the market price action. Daily chart. The daily chart shows that there is still some accumulation to be done prior to offering conviction for a favorable risk to reward swing trade. A bullish head and shoulders would be the result of a pullback to test the structure at this juncture. The first structure is marked at prior corrective highs, which guards a run to the weekly fib target. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US real GDP nosedived in Q2 2020 analysis. http ntvforex.com. News ID 4E0E53. 7/30/2022 012 p.m. Real GDP fell at a record pace in Q2, but monthly data suggest that GDP should bounce in Q3. However, uncertainties related to the pandemic continue to cloud the outlook later this year. Broad-based spending declines in Q2. Data released today showed that U.S. real GDP plunged 32.9% in the second quarter, the steepest annualized rate of decline in the 74 years in which quarterly GDP data have been available. Top chart. Previously released monthly data left little doubt that a record would be smashed with today's data release. The only question was the exact magnitude of the decline. In that regard, the plunge was not quite as severe as the 34.5% drop that the consensus forecast had anticipated. Nevertheless, this miss is simply a rounding error in a drop of this size. Parsing through the data reveals broad-based weakness in most of the spending components, which comes as little surprise given that the economy was more or less shut down from mid-March through mid-May. Real personal consumption expenditures (PCE) plummeted nearly 35%. Middle chart, fixed investment spending fell nearly 30%, and exports collapsed 64%. The 53% drop in real imports minimized the drag on overall GDP growth from real net exports. The only area of growth was the 17.4% rise in federal government spending, which largely reflects the administrative costs of the PPP loans that were extended during the quarter. The big drop in real GDP in the second quarter largely reflects the collapse in economic activity that occurred in late March and April. But monthly data show that the economy bounced starting in May. For example, real PCE shot up 8.1% in May, and nominal retail spending rose 7.5% in June relative to May. In nominal terms, shipments of non-defense capital goods, which are highly correlated with overall capital spending, was up 4.8% in June relative to its April low. In short, the economy entered the third quarter with a fair amount of momentum. Indeed, our current forecast looks for real GDP to grow at an annualized rate of roughly 18% in Q3. However, recent weekly indicators suggest that the economy is losing momentum again as COVID-19 cases have spiked in recent weeks. For example, initial jobless claims, which fell sharply in April and May, have moved sideways at an elevated level of 1.4 million per week recently. Chain store sales, which bounced sharply through June, have always moved sideways in recent weeks' bottom chart. Our forecast of continued growth in real GDP in Q4 and in 2021 is predicated on our assumption that a full lockdown of the economy a la March and April will not occur in coming weeks and months. We acknowledge that there may be restrictions reimposed in localized areas, but we believe that governors will be under tremendous pressure not to return to a full state of lockdown. That said, the economic outlook at this time is dependent on the evolution of the pandemic, which remains highly uncertain. To paraphrase a well-worn phrase, the only certainty at this time is uncertainty. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/NZD price analysis upside bias, testing 1.0800. http://ntvforex.com news ID 4F8F09. 5 minutes ago. By Matthias Salord. Aussie is retreating versus Kiwi, still above 1.0750 with a bullish bias. A break above 1.0800 would set the focus on 1.0850. The AUD/NZD is pulling back on Thursday, after finding resistance at 1.0800. The drop so far was capped by the 1.0750 zone that is a key support area. A slide below would alleviate the bullish pressure that is already weakening. On the downside, the next support is seen at 1.0700 and then a key area, around 1.0670 where the 20-day moving average converges with an uptrend line. The recent rally found resistance at 1.0800. A break higher would clear the way to more gains. Next in line, emerges a strong long-term resistance at 1.0850. A weekly close above would suggest more gains over the medium term. AUD/NZD daily chart. AUD/NZD. Overview. Today last price. 1.0751. Today daily change. 0.0027. Today daily change percent. 0.25. Today daily open. 1.0778. Trends. Daily SMA 20. 1.0669. Daily SMA 50. 1.0692. Daily SMA 100. 1.0579. Daily SMA 200. 1.0535. Levels. Previous daily high. 1.0795. Previous daily low. 1.0737. Previous weekly high. 1.0757. Previous weekly low. 1.0654. Previous monthly high. 1.0883. Previous monthly low. 1.0582. Daily Fibonacci 38.2%. 1.0773. Daily Fibonacci 61.8%. 1.0759. Daily Pivot Point S1. 1.0745. Daily Pivot Point S2. 1.0711. Daily pivot point S3. 1.0686. Daily pivot point R1. 1.0803. Daily pivot point R2. 1.0828. Daily pivot point R3. 1.0862. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD INR price news. Indian rupee struggles to justify Wednesday's spinning top. http ntvforex.com news ID 507F04. 0447 GMT. By Anil Panchal. USD INR fails to respect bearish candlestick as it recovers from 74.79. 21-day SMA exerts immediate downside pressure around monthly falling trend line. 74.45 becomes the key support to watch for the bears. USD INR picks up the bids around 74.84 during the initial Indian session on Thursday. The pair formed a bearish candlestick, spinning top, the previous day. However, the latest pullback from the monthly support line seems to question the further downside. Even so, a 21-day SMA level of 74.88 restricts the pair's nearby upside, which in turn holds the gate for the pair's rise towards 75.00 and July 14 high of 75.51. It should, however, be noted that the pair needs to close past 75.10 to confirm the negligence of the previous day's candlestick formation. On the downside, 74.60 and lows marked on July 6 and 21 around 74.45 become the strong support to watch. If the bears dominate below 74.45, March 27 bottom of 74.15 and 74.00 round figure will pop up on their radar. USD INR daily chart. Trend pullback expected. Additional important levels. Overview. Today last price. 74.795. Today daily change. 0.1532. Today daily change percent. 0.20%. Today daily open. 74.9482. Trends. Daily SMA 20. 74.9002. Daily SMA 50. 75.3892. Daily SMA 100. 75.5545. Daily SMA 200. 73.5358. Levels. Previous daily high. 74.9494. Previous daily low. 74.743. Previous weekly high. 75.0026. Previous weekly low. 74.5052. Previous monthly high. 76.5076. Previous monthly low. 74.9786. Daily Fibonacci 38.2%. 74.8705. Daily Fibonacci 61.8%. 74.8218. Daily Pivot Point S1. 74.811. Daily Pivot Point S2. 74.6738. Daily Pivot Point S3. 74.6046. Daily Pivot Point R1. 75.0173. Daily Pivot Point R2. 75.0865. Daily Pivot Point R3. 75.2237. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US GDP broad-based spending declines in Q2 Wells Fargo. http://ntvforex.com News ID 50A416. 3 minutes ago. By Matthias Salord. The U.S. economy contracted at a record 32.9% during the second quarter. According to analysts at Wells Fargo, monthly data suggest that GDP should bounce in Q3. However, they warn uncertainties related to the pandemic to continue to cloud the outlook later this year. Key quotes. The only area of growth was the 17.4% rise in federal government spending, which largely reflects the administrative costs of the PPP loans that were extended during the quarter. The big drop in real GDP in the second quarter largely reflects the collapse in economic activity that occurred in late March and April. But monthly data show that the economy bounced starting in May. Our current forecast looks for real GDP to grow at an annualized rate of roughly 18% in Q3. Recent weekly indicators suggest that the economy is losing momentum again as COVID-19 cases have spiked in recent weeks. For example, initial jobless claims, which fell sharply in April and May, have moved sideways at an elevated level of 1.4 million per week recently. Our forecast of continued growth in real GDP in Q4 and in 2021 is predicated on our assumption that a full lockdown of the economy a la March and April will not occur in coming weeks and months. We acknowledge that there may be restrictions reimposed in localized areas, but we believe that governors will be under tremendous pressure not to return to a full state of lockdown. That said, the economic outlook at this time is dependent on the evolution of the pandemic, which remains highly uncertain. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin cash price analysis. BCH USD switches to the recovery mode, jumps above $286. http://ntvforex.com News ID 51DB7D. 2 minutes ago. Bitcoin Cash BCH has recovered from the intraday low $280.90 and recovered above $285 by the time of writing. The fifth digital coin with the current market capitalization of $5.2 billion is still down nearly 2% on a day-to-day basis despite the upside momentum. BCH USD technical picture. On the intraday charts, BCH USD bumped into a local resistance created by the middle line of the 1-hour Bollinger Band at $286. A sustainable move above this area will open up the way to the next barrier created by a 50-hour SMA at $288. Once it is out of the way, the upside is likely to gain traction with the next focus on psychological $290 and the upper line of the 4-hour Bollinger Band at $293.30. The ultimate resistance OS created by psychological $300. BCH 1 US dollar hour chart. On the downside, if $280 gives way, the sell-off may be extended towards 200-day SMA at $273. This barrier served as a strong resistance for the best part of the year, so know it may provide strong support and trigger the next bullish wave. A sustainable move below this area will negate the bullish forecast and bring more bears to the market. BCH USD Daily Chart. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Maker DAO adds MANA token as a new collateral type. MANA USD bears take control after price shoots up. HTTP ntvforex.com News ID 038F9F. 2 minutes ago. Maker DAO has added Decentraland's native token MANA as a new collateral type. Customers can now use MANA for the generation of the stablecoin DAI. MANA is Decentraland's primary token. The Maker DAO ecosystem has added MANA, the native token of the Decentraland marketplace, as a new collateral type after an executive vote among MKR token holders. According to an official blog post, customers can now use MANA to generate the stablecoin DAI. MANA is Decentraland's primary medium of exchange and is used to pay for things within the virtual world. In the last few months, MKR token holders have voted to add the stablecoin USDC and WBTC as collateral types. WBTC is an Ethereum-based token that is one-to-one backed by Bitcoin. According to an earlier NTV Forex report, Maker DAO became the first DeFi protocol to reach $1 billion in total locked value TLV. The rise in interest in DeFi applications has driven the growth of the sector. MANA USD daily chart. MANA USD shot up from $0.04208 to $0.0487 this Wednesday. Since then, the bears have corrected the price to $0.046 over the next 2 days. MANA USD has two strong resistance levels at $0.0482 and $0.047. On the downside, healthy support lies at $0.0432 SMA20 and $0.0416 SMA50. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis. XAU USD buyers struggle to retake control. HTTP ntvforex.com News ID 12F627. 2 minutes ago. By Anil Panchal. Gold prices seesaw around $1,955 following its U-turn from $1,940. Risk-off moves gain momentum amid a plethora of headlines from the U.S. Virus woes, fiscal package uncertainty hit the market sentiment off late. Downbeat prints of U.S. and German GDP followed dovish Fed the previous day, China PMI in focus. Gold prices eased to $1,957 during the early Asian session on Friday. The yellow metal earlier surged from $1,939.66 before taking a U-turn from $1.960.32. In doing so, the quote managed to portray the first negative daily closing in 10 days on Thursday. Despite the reversal of the US dollar's early day gains, not to mention the US dollar index DXY drop to the fresh low since May 2018, the bullion failed to rise much off late while waiting for more clues. Bulls catch a breather despite broad pessimism. Be it the likely delay in the much-awaited US coronavirus COVID-19 aid package or the surge in the pandemic, not to forget chatter about the delay in American presidential election and devastating GDP figures, nothing was positive to the risk-tone sentiment. The latest virus update from the U.S. suggests that Texas marked the record deaths of 322 with a 62% rise in hospitalization on Thursday. This propels the total count of new cases in American top 4.5 million. U.S. President Donald Trump showed worries for the rapid increase but refrained from entertaining the case of a long-term shutdown. Elsewhere, the UK announced local lockdowns and figures China, Tokyo, and Victoria have also been disappointing off late, which in turn increases the safe haven demand of the metal. Also adding to the buying strength could be US President Trump's push for the delay in presidential election, up for November, while citing mail-in ballots. Furthermore, the U.S. Senate members are showing mixed signs concerning the $1 trillion worth fiscal package, as the White House Chief of Staff Mark Meadows recently said that he is not even optimistic about any bill in the near term. While portraying the risk-tone sentiment, S&P 500 futures drop 0.10% after Wall Street marked mixed closing for Thursday. Further, the U.S. 10-year Treasury yields revisited the all-time lows marked in March the previous day. On the contrary, receding demand from one of the largest customer, India, as well as vaccine hopes counter the precious metal bulls. Moving on, China's official PMI numbers for July will be the key to watch for immediate direction. The headline's NBS manufacturing PMI is expected to recede from 50.9 to 50.7, whereas non-manufacturing PMI may also weaken from 54.4 to 51.2. Should the data marks downbeat outcome, it will join the league of the US and German GDP, which in turn offer fresh support to the precious metal buying. Technical analysis. While observing the trading pattern of gold prices in last 3 days, it is known that the bullion flashed lower high formation and recedes the upside momentum. As a result, short-term sellers could eye the previous record high near $1,921 as the immediate target unless the quote successfully breaches $1,981. Should the precious metal cross $1,981, $2,000 will pop up on the bulls' radars. Additional important levels. Overview. Today last price 1956.59. Today daily change 14.86. Today daily change percent 0.75%. Today daily open 1971.45. Trends. Daily SMA 20 1838.3. Daily SMA 50 1775.77. Daily SMA 100 1717.1. Daily SMA 200 1625. Levels. Previous daily high 1980.89. Previous daily low 1941.58. Previous weekly high 1906.68. Previous weekly low 1805.86. Previous monthly high 1785.91. Previous monthly low 1670.76. Daily Fibonacci 38.2%. 1965.87. Daily Fibonacci 61.8%. 1956.6. Daily Pivot Point S1. 1948.39. Daily Pivot Point S2. 1925.33. Daily Pivot Point S3. 1909.08. Daily Pivot Point R1. 1987.7. Daily Pivot Point R2. 2003.95. Daily Pivot Point R3. 2027.01. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD bulls catch a breather around 0.7200 despite upbeat China PMI. http://ntvforex.com news ID 2558F3. 4 minutes ago. By Anil Panchal. AUD/USD seesaws around 0.7200 as China's official PMIs flashed better than forecast figures for July. Risk aversion gains further strength from virus woes, doubts over the U.S. fiscal package. Downbeat U.S. GDP, dovish Fed exert additional pressure on the U.S. dollar index. Risk catalysts, U.S. Chicago PMI, Michigan Consumer Sentiment Index in focus for fresh impetus. AUD/USD eases to 0.7205, up 0.15% on a day, during the early Friday. The pair recently surged to the highest since February 2019 while touching 0.7215 mark. Though, the bulls seem to wait for a more strong push before challenging the two-year high even as China flashed welcome activity numbers for July. China's July month NBS manufacturing PMI surged past 50.7 forecast and 50.9 prior to 51.1, whereas non-manufacturing PMI crossed 51.2 expectations with 54.2 figures. Read China's manufacturing PMI ticks higher to 51.1 in July. While AUD-USD fails to respect China's data, the pair buyers are likely watching the US dollar index DXY slump for fresh impetus. The greenback gauge refreshed the lowest since May 2018 before a few minutes. Searching for the underlying reasons, we can say that the latest jump in the coronavirus COVID-19-led deaths from Texas and a rise in the pandemic numbers from China, coupled with the fears of more local lockdowns in the UK, hurt the market's preference for the US dollar. Furthermore, a whopping 32.9% contraction in the US GDP also speaks loud for the US currency's weakness. Also adding to the risk-off mood could be the delay in the much-awaited Phase 4 fiscal plan from the US and American President Donald Trump's push for a delay in the November month's presidential election. Against this backdrop, US 10-year Treasury yields take rounds to the lowest since March, whereas S&P 500 futures rise 0.40% to 3,262 by the press time. However, stocks in Australia, Japan, and China are down as we write. Looking forward, traders will have to concentrate on the risk catalysts for fresh impetus while also waiting for the second-tier data from the US. Forecasts suggest U.S. Chicago Purchasing Managers Index PMI to recover from 36.6 to 43.9, whereas Michigan Consumer Sentiment Index could slip from 73.2 to 73.00 in July. Technical analysis. The pair's ability to cross April 2019 top surrounding 0.7210 enables it to attack the year 2019 high near 0.7300. However, overbought RSI may trigger fresh pullback in a case where AUD-USD prices slip below July 22 high near 0.7180. Additional important levels. Overview. Today last price 0.7204. Today daily change 9 pips. Today daily change percent 0.13%. Today daily open 0.7195. Trends. Daily SMA 20. 0.7041. Daily SMA 50. 0.6923. Daily SMA 100. 0.6601. Daily SMA 200. 0.6697. Levels. Previous daily high 0.7198. Previous daily low 0.712. Previous weekly high 0.7184. Previous weekly low 0.6972. Previous monthly high 0.7065. Previous monthly low 0.6648. Daily Fibonacci 38.2%. 0.7168. Daily Fibonacci 61.8%. 0.715. Daily Pivot Point S1. 0.7144. Daily Pivot Point S2. 0.7094. Daily Pivot Point S3. 0.7067. Daily Pivot Point R1. 0.7222. Daily Pivot Point R2. 0.7249. Daily Pivot Point R3. 0.7299. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. NZD-USD again recedes from 0.6700 on RBNZ's Bascand, China PMI in focus. http://tvforex.com News ID 28D23A. 4 minutes ago. By Anil Panchal. NZD/USD repeats Tuesday's pullback from 0.6703, the highest since January 3, 2020. RBNZ's Bascand sounds cautiously optimistic while expecting some time before full economic recovery. US dollar weakness keeps antipodeans strong against all odds. China's NBS manufacturing, non-manufacturing PMIs to soften in July. NZD/USD marks another retreat from 0.6700 while easing to 0.6690 amid the early Friday morning in Asia. The Kiwi pair recently weighed down by cautious tone of the RBNZ Deputy Governor Jeff Bascand. Though, bulls remain hopeful as the US dollar index DXY stays near the 26.5-month low. RBNZ's Bascand placates bulls. The RBNZ policymaker Bascand spoke on the banking post-COVID-19 during the initial New Zealand session. The speech focused more on how the Kiwi bankers should manage their pockets as the economy edges up from the pandemic. Though, his cautious comments over the pace of the recovery gained major attention of market skeptics. Read RBNZ's Bascand expects some time before full economic recovery. Elsewhere, US President Donald Trump's signals that the long-term shutdown is possible, as well as local lockdowns in the UK, are challenging the market sentiment and pulling the quote backward from the multi-month high. It should also be noted that downbeat comments from the US Secretary of State Mike Pompeo, concerning Iran, offer additional burden on the NZD/USD prices. Furthermore, uncertainty surrounding the US Phase 4 fiscal package adds to the pair bulls' worries. The quote benefited from the US dollar's slump the previous day. The greenback had to bear the burden of devastating GDP, 32.9% QOQ versus 5% prior, following the Federal Reserve's dovish halt of Wednesday. Also negatively affecting the US currency were the rigorously rising coronavirus COVID-19 cases. On the contrary, the pandemic's resurgence in the largest customer Australia and global worries concerning the US fiscal package, not to forget about recovery in macroeconomics, also probe the pair bulls. It's worth mentioning that New Zealand's ANZ Roy Morgan consumer confidence for July slipped from 104.5 prior to 104.3 and offered additional reason to question the pair's upside move. Amid all these plays, Wall Street benchmarks flashed mildly negative closing, with Nasdaq being an exception with 0.43%, whereas US 10-year Treasury yields revisited the all-time low of 0.536% flashed in March. Looking forward, China's July month official manufacturing and non-manufacturing PMI are likely to flash soft numbers and may negatively affect the pair prices. However, any positive surprises will be enough for the pair to challenge the yearly top surrounding 0.6740. Forecasts suggest that Chinese manufacturing PMI may recede from 50.9 to 50.7 with non-manufacturing PMI likely stepping back from 54.4 to 51.2. Technical analysis. Unless declining below 0.6638, comprising an ascending trend line from June 30, the NZD/USD pair is less likely to stop attacking the yearly top of 0.6741, needless to mention December 31, 2019 high of 0.6756 as the following resistance. Additional important levels. Overview. Today last price. 0.6689. Today daily change. 19 pips. Today daily change percent. 0.28%. Today daily open. 0.667. Trends. Daily SMA 20. 0.6588. Daily SMA 50. 0.6464. Daily SMA 100. 0.6229. Daily SMA 200. 0.6354. Levels. Previous daily high. 0.668. Previous daily low. 0.664. Previous weekly high 0.6691. Previous weekly low 0.6538. Previous monthly high 0.6585. Previous monthly low 0.6186. Daily Fibonacci 38.2%. 0.6665. Daily Fibonacci 61.8%. 0.6655. Daily Pivot Point S1. 0.6647. Daily Pivot Point S2. 0.6623. Daily Pivot Point S3. 0.6606. Daily Pivot Point R1. 0.6687. Daily Pivot Point R2. 0.6704. Daily Pivot Point R3. 0.6728. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Altcoin market update: Bitcoin Cash and Chainlink BCH/USD retreats from $300 level. http://ntvforex.com news ID 33D6C3. 4 minutes ago. BCH/USD and http://ntvforex.com news ID 33D6C3. USD both experience massive bullish price action. http://ntvforex.com news ID 33D6C3. USD currently faces resistance at the SMA 20 curve. BCH/USD daily chart. BCH/USD jumped up from $287.85 to $294.30 this Thursday. The bulls managed to take the price above the $300 level, but have since retreated. The MACD shows increasing bullish momentum, while the price is trending above the 20-day Bollinger Band. The latter indicates that the asset is overvalued and may face bearish correction this Friday. The price has healthy support levels at $294.30, $273.70, SMA 200 and $266. http://ntvforex.com news ID 33D6C3. USD daily chart. http://ntvforex.com news ID 33D6C3. USD bulls took charge of the market this Thursday as the price jumped from $7.08 to $7.46, breaking above the downward trending line. In the process, the price has currency found resistance at the SMA 20 curve. The signal line and MACD line have stopped diverging, indicating a reversal of bearish momentum. The price shows strong resistance at $7.60 SMA 20, $7.65 and $8.09. On the downside, there are healthy support levels at $7.12, $6.51 and $5.85 SMA 50. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. White House Chief of Staff Meadows: I'm not even optimistic about next week. http://ntvforex.com news ID 3CD294. 2 minutes ago. By Anil Panchal. Adding to the uncertainty surrounding the U.S. fiscal package, the White House Chief of Staff Mark Meadows doubted the American senators' ability to agree over the coronavirus COVID-19 bill soon. Earlier during the day, the policymakers refrained from providing details on a deal to extend or replace the extra $600 per week in payments to tens of millions of people who lost the job due to the pandemic. Key quotes. Not very optimistic that we will have any kind of an agreement on a comprehensive bill in the near future. I'm not even optimistic about next week. FX implications. The news adds to the market's risk-off mood and offers an additional burden on the US dollar. That said, the greenback gauge dropped to the fresh lows since May 2018 on Thursday. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. FAANG's report the same day analysis. http://ntvforex.com news ID 4B04D1 7/30/2020 11:45:43 AM. Google and Amazon. Amazon. Corporate earnings and concerns about the impact of new localized lockdown measures due to spikes in coronavirus infections, alongside geopolitical tensions, have been in the mix for nearly a month. Markets remained and will remain glued for the rest of the week to the ongoing stream of earnings reports, as some of the tech giants are reporting today. Yesterday, the tech leaders testified in Washington, with the CEOs of Amazon, Apple, Alphabet, and Facebook appearing together before Congress for the first time, after 13 months of investigation by lawmakers into the market power of big tech. Even though the testimony is crucial, the earnings releases for the Q2 of 2020 will likely dominate the market. All four companies' earnings reports are due to come out today after the U.S. market close, who together have a market capitalization value of almost $5 trillion. Amazon, however, is the company that is expected to experience a big surprise in its earnings per share EPS, as the surprise prediction tool has posted a 107.82% increase recently on the expected EPS after an estimate revision from Zacks. In fact, Zacks' most accurate estimate tool for the current quarter is currently at $3.64 per share for Amazon, compared to a broader Zacks consensus estimate of $1.75 per share. This suggests that analysts have very recently bumped up their estimates for Amazon, giving the stock a Zacks earnings ESP surprise prediction tool of 107.82%. According to Refinitiv, Amazon is expected to post a revenue of $81.6 billion, which reflects an increase of more than 14% on revenue on a quarter-over-quarter basis. Despite lockdowns due to pandemic, there are a number of factors in favor of Amazon in Q2. The company's retail sales strategies were very efficient, with huge investments in its infrastructure, something that could prove profitable in this earning report but also the future ones. In general, however, e-commerce firms eBay, Amazon etc. have likely benefited the most from the stay-at-home measures and the closure of retail stores, as a more than 78% spike in online shopping was identified in May. According to Adobe Analytics, the pandemic led to $52 billion in extra online spending, based on actual spend versus prior projections, while May generated $82.5 billion in total online spending, with e-commerce shopping levels tracking above the heavy spending period of November and December 2019. Online shopping in the future could be adopted as the new normal. Additionally, e-commerce demand boosted Amazon in growing its advertising platform and benefiting from advertisements, something that could add up to a strong Q2 and a strong 2020 in general. Especially after the advertising boycott against Facebook that started in July. The widely publicized advertiser boycott against Facebook has less than a week to show it has become a global coalition solid enough, and strong enough, to take on the social media giant. Even though the pandemic caused a spike in Amazon's customers while other businesses either closed or struggled to stay afloat, the company had to spend at huge levels in order to adjust its infrastructure according to COVID-19 restrictions. The spending is rumored to have been given for hiring, delivery infrastructure, delivery vans, safety measures, air fleet expansion for international delivery services, etc. The company's emphasis on drive-in grocery delivery, such as the Amazon Fresh Pickup, and Amazon Go, its first brick-and-mortar grocery store, helped in garnering a strong band of customers. But was the spending reasonable, and how much needs to be spent to get Amazon back to its pre-pandemic normal? Last in my list of positive factors of potential Amazon success is of course its revenue stream, which so far looks to be impressive with or without the pandemic. During the to-be-reported quarter, however, the number of Prime memberships has strengthened significantly due to Prime Free 1-Day Service, Prime S Same-Day Service. Amazon Fresh Service. 2-hour delivery service of natural and organic products such as meat and seafood. International delivery services expansion. Amazon extended its partnership with the Air Transport Services Group ATSG to lease 12 additional Boeing 767-300. Additionally, Amazon Prime allows customers to access Prime Video, which is its streaming media service. More Prime subscriptions could be seen also due to the increase of content and the overall portfolio on Prime Video. Hence all the above are driving the market's expectation for a very successful earnings report for the quarter but also for the remainder of the year, since all these efforts could be proven beneficial for the long-term outlook of the company, with Amazon eliminating the competition. In summary, the concern could be only on the amount of expenses that the company paid as a response to COVID-19, and whether it significantly exceeded its latest call of $4 billion on infrastructure. Alphabet. Google. Alphabet Incorporated is a holding company and Google's parent company. The company's businesses include Google Incorporated, which is the largest one, and its internet products, such as Access, Calico, Capital G, GV, Nest, Verily, Waymo and X. The company's segments include Google and other bets. Alphabet's second quarter earnings for 2020 will be reported along with the rest of the giants. The consensus recommendation for the company is buy to strong buy, corresponding to the majority of the consensus recommendation from Reuters Icon, as 20 and 12 out of 36 analyst firms recommend buy and strong buy respectively. Hence, no analyst firm is making a sell or underperform recommendation for the company. According to Zacks Investment Research and Reuters Refinitiv, the information service is expected to have $8.21 in earnings per share during the second quarter of 2020, which represents a yearly drop of 42% since the reported EPS for the fiscal quarter ending June 2019. Focus should also turn on the revenues number, which is projected to hit a 46% YoY decline, to around $37.37 billion, from the $38.94 billion reported last year and the $41.16 billion reported in the first quarter of 2020. Alphabet has faced some serious legal difficulties during the year, with the federal government and almost every state attorney general having begun antitrust inquiries into Google. The feds are concentrating on bias in searches, on advertising and on the deployment of Google's Android operating platform. However, if we focus on the earnings report for Alphabet Inc., things could turn more optimistic than expected, as the pandemic boosted the search giant's quarterly profits due to a boost to the advertising sector similar to Amazon's and due to the growing advertising boycott against Facebook. More precisely, its YouTube business is the one that is expected to strengthen the company's financials in Q2 but also the second half of the year. As analyst Brent Till stated, a combination of positive pricing and demand trends, YouTube's size and reach in connected TV/CTV advertising, and relatively strong positioning in brand safety, ensuring that advertisements aren't shown on offensive content, make YouTube an attractive place for ad buyers. A good chunk of unspent political advertising budgets should also flow to YouTube ahead of the upcoming elections. The new features in the advertising business by Google are the ones that are increasing momentum in this sector, i.e. local services ads by Google, local opportunity finder, local store information, smart campaigns, and Grow My Store for retailers. Google also made enormous efforts in boosting its e-commerce services as well, by launching a new voice-based grocery shopping service, which allows Google users to voice order groceries with the help of the Google Assistant. Further spending has been seen in Google Cloud in order to expand its revenue streams beyond advertising. Google Cloud generated $8.9 billion in revenue in 2019, a 53% increase over the previous year. Despite this being a highly competitive sector, and according to Bloomberg, in May the company had to cancel part of its plans for a major new cloud service in China and other markets deemed sensitive over geopolitical tensions and COVID-19 concerns. It managed to expand the cloud service portfolio and data centers within Q2. During the quarter, the company announced additional plans which could eventually positively impact the upcoming results for 2020, such as $2 billion investment to build a data center in Poland, which should add efficiency to the company. 2. Official long-term partnership between Google and Deutsche Bank. The partnership will enable Deutsche Bank to accelerate its cloud transition and build on the engineering capabilities of both companies. Together with Google Cloud, Deutsche Bank will transform its IT architecture and thus generate considerable value for its clients. Partnership of Waymo and Volvo for the development of a new self-driving electric vehicle for use in a ride-hailing service. This deal, along with the acquisition of Latent Logic, strengthened its presence in the booming self-driving vehicles market. Hence, the risks that Alphabet faces ahead of the report is the solid competition from Amazon in advertising business and cloud services, but also the increasing expenses which could affect the Q2 report. At this stage, we have to point out that the consensus recommendation, similarly to economic data forecasts, has a significant effect on the near-term stock price, as it represents a company's wealth picture. Hence, on every earning report, stock price is highly influenced by the comparison between the outcome and the expectations. The market tends to react positively if the outcome comes in better or at least in line with the forecast, while the price moves lower if the reported earnings miss expectations. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.